What is up, beautiful people? Welcome to the Midday Show, Learning How to Trade. That's your girl, Adara. I'm Sharif. And what a day it has been today. What a move down. I didn't expect this. I thought we get a better than expected jobless report, the good PPI yesterday. We're going to run a little bit. Not so, though, Adara.
No, I would say the market is running. Instead of running for the hills, because that implies the upside, it's like running down into a ditch or something, or like driving a bicycle into a ditch. It's having a very bad time, and things are down by a lot too. Like Nvidia's not down by that much, but I mean, there's a lot of the NEO, I believe, is down quite a bit. NEO is down almost 10% right now. Look at this, nary a green candle except for a small handful here, very few. Now it looks like maybe we have this bottom here, but very weak as well. Even Tesla, which has been trying to recover from the last couple of days, we've had a lot of Tesla strength. Now Tesla is struggling a little bit, although we might be heading back to the upside now. But yeah, definitely a weak market. I would agree. Not a lot of pretty stuff on the green side today.
Ma'am. Nope. All right, the topics for today, which will come up in a second. You guys know, oh, there's Sean and Neil. Hello. You guys know how this works. We do like the split screen now. The topics come on the side, but I'll let you know what they are. We're still going with the managing risk theme for the week. Tomorrow, the final day. Next week, we will have chart patterns. I know everybody's going to be excited about that, and I always talk up a storm about chart patterns. Ascending wedges, descending wedges, compression patterns, flat bottom breaks, head and shoulders, reverse head and shoulders. We're going to go through the gamut, baby. But today, first and foremost, optimal stop loss level. Numero deux. Keeping risk consistent, okay? And then third and finally, we touched a little on this yesterday when we talked about going and playing badminton. Yeah. Managing emotions when you take big L's. But first, we got to get some housekeeping. Guys, we are brought to you by Search Trader account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the good folks there at Surge Trader. I think they had like that competition or something from the other day.
Yeah, I think I overheard. I think that might be. I don't know if that's still on, but I overheard like whispers of that. So
whispers.
That's cool. Very cool. I mean, not whispers, but I know I've heard mention of the contests. So.
Okay, so we got to get another housekeeping item out of the way. There was some disagreement. Yesterday between us and some individuals in the chat with respect to whether stop losses can trigger pre-market and aftermarket. And this is a good point that we want to iron out because it really does make a difference. I mean, if you put in a stop loss, you should expect it to trigger, but you have to know what parameters to enter in order to ensure that's going to happen. So first and foremost, you need to check with your broker. Can you trigger stop losses outside regular market hours? Regular market hours are 9:30 to 4. Secondly, you have to choose the setting in your trading platform to allow for orders to trigger outside regular market trading hours. And thirdly, you need to make sure you're using limit orders. I'm about to show you a video here that's going to silence whatever questions there were with respect to this issue. Now, I got here bright and early, as I typically do. Usually I'm prepping so that I know I don't talk out of my rear end on the big desk, right? But in this case, I had another order of business. Let's get to the screen. Maximize me if you're able to, baby. All right, here is BBLG, a ticker that was moving today. Up over here on the top right-hand corner, you can see 7:27 a.m. Clearly, we are outside regular market trading hours. Here's the chart. Let's play the video. Where's the play button? Spacebar, thanks. The Chilean Nightmare knows exactly what's going on. So here I am. No, go to that. So now look what I'm doing. Stop loss. See that? Stop loss, all right? And then we're going to select this bad boy over here, and we're going to select not stop loss, but stop limit order. Now that gives you two windows. It gives you the triggering price that I spoke about yesterday, and it gives you the limit price. You have two things you need to enter here. The triggering price should be the first one. The limit price is the least amount you are willing to accept for the sell order. Let's go. So in right here, the price is at 96.46. So we're going to go ahead and put a stop of 95. I type it in wrong initially. I type in 95. We're going to go put 0.95, and then we're going to change the limit to 0.94. Okay? And then we're going to go ahead and put buy at the ask, so just so that we can trigger. And we submit. It pops up a whole bunch of messages because I don't ever use this thing. And there we go. Now we're filled. There's the blue little triangle there that shows that we're filled. Now, we start moving up. We move up. We move up. So look what it says right here, guys. Sell, stop, limit. See that? Sell, stop, limit. 7:28 a.m. And the price ends up moving up. So what I end up doing is I move up my stop so that it can trigger because, well, it was moving away from me. So there we go. Moves up to 99. I move up my stop to 98.05. And look what happens here when the price comes down. Trigger. It triggered. Okay, guys. So let's get this out of the way. In order to have your stop losses trigger before 9:30 and before and after 4 o'clock, you have to ensure, number one, that your platform, your brokerage allows you to do that. Number two, you have to select the order type to allow it to trigger outside regular market hours. And number three, you have to select stop limit order, not just stop order. That is a market order. That will not trigger pre-market and aftermarket. I hope we have that one out of the way and we don't have to rehash that ever again, okay? So let's move this bad boy out of the way, and I don't even know how to get it out of the way here. I do. What's going on? There we go. All right, so first and foremost, oh, thank you, Vadzim. 20 euros. Jeez Louise, Vadzim, I appreciate you, and I appreciate the 20. That's very nice of them. Thank you.
It is.
Nicole Harris, shout out to Hotlanta. I haven't talked to Nicole in a while. Shout out to you. Hope you're doing well down there in Hotlanta. How's the weather, by the way? All right, Adair, let's get to business here. Let's get down to business. Optimal stop loss levels. Let's talk a little bit about this. Okay, let me just load up my notes over here so that I don't talk out of my rear end again. All right. So let's go to Apple. We're going to have a look at Apple. We got rinsed on Apple yesterday for a 50-penny loser.
Oh, yeah.
Yeah, well, that's okay. Hot, I don't need a jacket, she says. Okay, well, that's good.
Fair.
All right, there are many different approaches that traders can utilize when deciding where to place a stop. You can set stops in accordance with, for example, moving averages. Now, anybody who follows the show knows that we really respect the 200 period and the 50 period, okay? So you can set stops above and below the specified moving average for longer short positions. The charts here show the blue, which is the 200 period, and the red as the 50 period. I should probably make them a little thicker so that you can probably see them. Now, it's not just going to be willy-nilly, hey, let me just use the 50 period moving average because I feel good and I woke up today and I felt like, the 50 period was going to be relevant. No. You have to look for relevance of the moving average in the previous price action. I've talked about this before. Some days, Apple respects VWAP, whether as support or resistance. Some other days, it just blows through it like it doesn't matter, and it looks to actual price levels. For example, the whole dollar, the half dollar, a previous day's close. We've talked about this before. So you can use moving averages. They are absolutely accurate and relevant. However, there has to be evidence on the chart that they are being respected at Arrow.
Yes. So I think like we've had this conversation too. It's like don't use an indicator that's not actually going to help you or that hasn't been interacting with the stock today. So a good example is you could definitely use VWAP for NVIDIA to look at your stop or to try to indicate your risk and a good point of entry, because look at how much this stock has been interacting with VWAP. It will not leave VWAP alone. We went lower here, we keep bounced back at VWAP. Like we've literally just been dancing and like weaving in a snake-like formation around VWAP all day today, right? So then you could use VWAP. That would be a very solid indicator with which to use to set your stop loss or to look here. Like, for example, let's see, I'm trying to find a good example here. Yeah, I mean, like we had this, now earlier this is gone, but now we had like pre-market, you had this double bottom-ish type formation going on at this 483. So if you were to kind of go long here, you could, like at this point after the double bottom, you could set your stop loss, for example, at 483 because you know it's probably going to interact with VWAP. This is where we had the double bottom. That would maybe be a decent place to set it. So I think just kind of looking at, and not every stock is going to interact with every indicator at every time. I'm still working on using indicators other than VWAP. That is the indicator I use. But you can look at volume as well and kind of, a little bit different for setting stop loss, but if you know what levels are interacting, with high volume, you can kind of indicate like, what's going on where, at what point, what were we doing when we had this max volume? Do you know what I mean? And kind of look at that as well. So there are, I definitely think in terms of like setting stop loss and deciding when to get out, I think you can kind of look at the levels, depending on what each stock is doing. And in this case, my NVIDIA example here, definitely VWAP is a point of entry. And if you look at this here, we even had now we're moving up off of VWAP. So in that case, you could maybe set your stop loss kind of maybe below here where we had that last kind of dip, like our last kind of bottom. That would be like around 485, 60-ish. So really just each stock is different, but really just looking at a stock by stock basis and not using a one size fits all approach, because not every stock is going to interact with every indicator every day in the same way.
Absolutely. Very well put, Adair.
Thank you.
All right, guys. Second order of business here, optimal stop loss levels. We've all heard of support and resistance. We just don't trade off it to take long and short positions. We can also base our stops off it. Let's have a look at the Apple chart over here, okay? We're going to use Apple today, guys. Now, 190 was a clear level of resistance for Apple, not because it's just the whole dollar level or the $10 level, but this takes us actually back into the summer where 190 was a clear resistance level that we rejected off multiple times. Now, so you saw Neil get into Apple today short at 190, right? And then he left his stop at high of day, okay? So what is at the time high of day was that 190.31. You can't see it now. Maybe I can show you on the 1 minute where it was the 130. There it is, 121 right there. So let's go ahead and put in a horizontal line right there at that 190.21. So the price ended up coming back down. He ended up getting short when it came into 190 again, knowing that that was a resistance level in the summer, and then placed his stop at the resistance level on the day, on the pre-market top at that 190.21. So set stops below or above, depending on whether you're going long or short, resistance for long or short positions. The chart here shows the stop being placed below the support in a ranging market, allowing the trade enough room to breathe while protecting against a large downtrend move. And so that was basically the idea here, right? You're going to get in short at that 190 level, but it had already broken it, knowing full well that that 190.21 was the pre-market or was the IB high, and placing your short right there, your stop right there, not allowing it to run. So in addition to being able to use moving averages, you set stops at key areas of support and resistance, Adair.
Yeah. So I think also too, you can look at kind of where to enter and exit with regards to risk with previous day movements as well. So right now I have Eli Lilly up. We're having another sort of flat bottom situation double bottom, I guess, at this 586 level, which, I'm going to scroll so I can show this. That was where we were having a double bottom yesterday, and I was actually in that trade. So basically, this is to kind of say that I think sometimes if you look at like previous levels and what we're doing on, on past days, sometimes that can help you set your stop as well. So the issue with this trade, for example, even though, it looks good, we do have previous day levels, which aren't always relevant, but can sometimes be interesting for, looking at stops, looking at what kind of levels are of note. The one thing here is it'd be a little difficult to set a stop because we don't really have anywhere to go below there. This is kind of as high as we've kind of been trading for both those days, right? So I think you might have to look even further at past days. So I'm going to look at the daily here and kind of see. So I did not realize how much I've traded the stock. But yeah, until I
you were going to town with that yesterday.
Yeah, yesterday I was, but also apparently last week as well.
Okay.
But basically, so the one thing here is the last time we were kind of below that level, other than like wicks decisively, I guess seems to be when is this? November 6th. So it's a little bit harder. The reason I bring this up is because when we do have levels that are interesting from the previous day, it'd be a little bit harder for me to figure out where my stop loss would be below that, because we haven't really had much action below that level, right? So it's all things to kind of consider when you're entering a trade and when to look at for stop levels, because you really want to make sure you have some support so you're not just blindly going head first into a trade. Get the ducks in a row first and then take them to the marsh or pond.
All right, scrambled eggs on toast. That is fantastic. Sans the toast. Because, well, actually, I don't mind toast right now because I'm trying to gain weight. That's what sucks, about trying to bulk in the summer, because I have to be on camera, so my face gonna like blow up like a basketball, and there's just nothing I can do about that. You want to gain the muscle, you got to gain the fat with it, but that's just the way it goes around here. Sean is short AMD at 120 again, already 50 smackaroos or pennies in the money there, taking that one off the $10 level. Shout out to Sean. All right. Scrambled Eggs on Toast asks the following. Are you allowed to key in your stop loss first and then execute your buy short trades? Will the stop loss trigger without any trades, or do we have to have the trade in first? Now, I know Neil talked about that this morning. Every platform is going to be different. P-Pro 8 allows you to enter in your script stop first, okay? I've explained this before, but it's worth explaining again. On our system here, we have something called script orders. They sit on our servers. They don't go to the exchange. They only trigger when the parameters are met, okay? And the parameters are met when the price that you've inputted into the computers are triggered or are reached, okay? So in P-Pro 8, you can absolutely enter the script stop order first and then get in your order after. For example, on my platform, though, if I was trading at home on IBKR, or so whatever it's called, Trader Workstation, no. The answer is no. If I want to have an attached stop loss, I have to attach it to the original order. That doesn't mean that I can't put in a separate stop order, but it's not going to be called a stop. It's going to be basically a sell limit order that won't trigger it unless either number one, it goes short, or number two, I actually get into the long position and then it tanks. What's going on over there? You're printing? He's already 75 pennies on money, so we're gonna, oh, sorry about that. I was trying to hit the banks for you. I didn't mean to interrupt the money spinning.
The buttons are overriding each other.
So anybody who's following the Katina Man's trades, short AMD 120, still taking that bad boy short as the market tanks. What?
We're back to net positive on the day.
He's back to net positive on the day, so we're gonna hit a couple of banks for my man over there as he duels with the market there, Adair. So, just want to make that clear. I don't think that there's a hard and fast rule with respect to be able to add stops prior to you entering your order. It's simply about what your platform allows you to do, Adair.
Yeah. That being said, though, I think like it's interesting. I think you should also very much be aware of where you want to set your stop before you enter the trade, though, regardless of whether you enter it before you actually enter or not. Like before you, sorry, I worded that poorly. Whether or not you put in your stop before you enter your trade, depending on what your platform allows you to do, you should have an idea of where you want to stop. And I think that's why, like, or where you want to put your stop, sorry. Because I think it's really important to kind of like look, plan your trades, be patient, don't just run in head first, as I was kind of saying, right? Like really look at, so for example, I was kind of, staring idly at Tesla earlier and planning what would be interesting about this one to me. So basically you have to plan, like for example, for this to limit risk, I was looking at this around this level. I would have gotten this out probably, I would have taken part of my position out around here, 237.04. Why? Because that was where we last were before we had the dip. So I know we can get to that level, or I'm semi-confident we can get to that level, but I don't know if we can get much higher, right? Especially because we're negative on the day. Lots of elements to consider when we factor in risk. Now again, though, much like Eli Lilly that I was mentioning earlier, this one's a little bit harder for where you would get out, right? Because this is where I'd want to get in. This is where I was interested in getting in once we had this break above there. So if I actually got in around this area, then maybe I'd put my stop kind of around where our low of day was so far, which is this 234.5. But also maybe, if I want to get in lower around this 234.5 when you're first seeing this double bottom, then maybe in order to figure out where to exit, I would use the risk to reward ratio, right? So I'd say if I'm trying to get out here at 237, then according to the ratio, depending on, what risk to reward I want to use, not that I'm definitely someone who often uses risk reward, but I'm just thinking, different ways to approach a trade, right? Especially in this kind of trade when we do have this double bottom situation where I don't know how much lower we can go, then I might want to use a different approach just to make sure that I'm kind of have a stop loss that makes sense. However, if I'm going to use risk to reward to enter, I also have to use it to exit the trade, because we're talking, it's very much easy. You have to be consistent. Keep risk, because I guess I'm getting ahead of myself. But whatever you use to enter should be the same metric you're using to exit the trade. So if you're going to play off VWAP, use VWAP the whole way. If you're going to do risk reward, do risk reward the whole way. If you're using dollar levels, et cetera, et cetera, et cetera. So I think, yeah, it's very much about just like whatever you use, make sure you stick to it at least for that trade, just so that you have a consistent risk level and that you're actually reacting and interacting with this trade in a way that makes sense throughout.
Absolutely agree. All right, now optimal stop loss levels continued. We glanced a little bit. We glanced over this a little bit on Monday. I believe, I don't know if it was Monday or Tuesday, but it was one of those days when we talked about average true range, ATR. One of those ones that's talked a lot about in the technical analysis books, and definitely one that was talked a lot about when I first started trading in 2020 and, was looking for sources online about how to learn this, that, and the other. Let's talk a little bit about it. ATR. ATR measures the average pip or point or penny, whatever you want to call it, movement in any security over a specified period and provides traders with a minimum distance away to set their stops. Basically, the idea is how wide is the movement or how volatile is the stock on a daily basis on average. So if I'm just giving you an example. Let's say Apple moves on average per day $3 a share, okay? So I have to be cognizant about the time frame that I'm trading. If I'm trading on the daily, then the ATR is $3, because I need to keep that in mind because I'm entering a swing trade on the daily. However, if I'm trading off the 15, if I'm trading off the half, what's the ATR for those time frames? Why does that matter? Because if you're getting in on that particular time frame, you have to know what the odds are it's going to move plus or minus whatever pips, whatever dollars, whatever cents. That way you can have an idea about where you can place your stop. And I've talked a little bit about this in a more informal way. Let's look at the chart for a second here, over here. Let's bring in a small cap gapper. I think this one probably would help. How come it's not changing? Oh, that's why. Let's go to that. And then we're going to go like this. Okay, this is a small cap gapper called SGD. This is probably not the best one to use because it's halting too much. Maybe there's another one here, Wave D. Yeah, that's not the one I want to use either. Give me a second here to find a better one. Where's that other one that I was looking at here? BBLG. There we go. We'll go to that one. BBLG.
Oh yeah, this one's been moving.
Right. Okay. So having a look here, look at this area over here. Okay. Very tight consolidation. Very tight consolidation over here as well in the pre-market. But right when the market opens up, the average length per candle really it gets elongated. It really grows. So if we were talking about the range per candle on the 1 minute chart of being about, let's say, 1 or 2 pennies in the pre, as soon as that the bell rings, all of a sudden the average true range per candle absolutely increases. So we can no longer have the same type of stop that we had in the pre-market just based on the new volatility that we're getting after the bell. Okay? And so you can informally look at that by looking at how wide or what the volatility per candle is, whether on the 1 minute, the 3, the 5, what have you, without actually having to use the measure of average true range itself. You can kind of have a visual look, be like, okay, look, every candle here seems to be about 5 to 7 pennies, whereas in the pre, it was about 1 to 1.5 pennies. So there's no way that I can have as tight of a stop in the regular market hours as I had in the pre-market, because all of a sudden the length of those candles absolutely changes, and that is no longer relevant. So you can try to use average true range. You may have access to that data, you may not, but if you don't, you can actually visually make an inspection. How wide-ranging is the candle? That should influence how tight or not untight your stop is. The Hayes Records, example of options R&R. Thank you, by the way, for the $4.99 super chat, Hayes. I was eyeing Amazon 140C with 140 call with a $30 risk on a 10% stop loss. The move rewarded $400 on the bull gamut. Didn't take because I'm sick. You're not sick. You just probably held a little bit too long, man. But good call there. I took Amazon long this morning for about 60 pennies. The Kenobi, the Obi one, Obi once, twice, and thrice. He took that bad boy for $1 some odd money. And I yelled to him. I yelled, Obi, are you taking Amazon 140? He didn't even glance at me.
He was like, I'm too busy taking Amazon 140.
Exactly. He was fixated on that
That's
speed.
amazing.
Oh, yeah.
Go Obi. We don't call him the Amazonian for nothing.
Exactly. BlackBerry, that ATR should be an advantage, especially for trailing stops. Absolutely agree with you. Absolutely agree. The Hayes Records, I got the Rona still, bro. So you weren't thinking clearly. It was fighting your body for resources there, I'm assuming. Alan Sebastian, could you please take a look at Baba thinking about a swing? I don't mind doing that, but you know, we're changing a little bit of the format of the show where the initial stages we talk a little bit about the topics at hand, and then, you know, when things slow down a little bit, we'll get into each individual name and give you our opinion on that. But anything to add, Adira, with respect to using ATR for stops?
Honestly, I do not know that much about ATR. It's definitely something I'm going to have to learn a little bit about. I am looking to learn more about indicators, especially, you know, next week with chart patterns coming up, you know what I mean? So I'm trying to learn more about different indicators. I mainly do use VWAP, but I think like the more I trade, the more I'd like to kind of diversify and switch it up. I think part of it too is because I don't trade that much. I mostly trade kind of during the midday, right? Yep. So I think I definitely, though, have lots to learn, and I think, you know, people in the chat having lots of opinions. Always, like, Sharif, you've always, like, you know, taught me a lot as well, so I'm excited to learn more with regards to indicators and risk reward. In terms of, like, risk reward in real time, though, with regards to yesterday, I was talking a lot about conviction and knowing when to hold them and knowing when to fold them. Eli Lilly, I got into this long because I liked the flat bottom-ish kind of look we were initially having. And then also, this was a good level from yesterday, but basically we're kind of breaking near. I decided I was going to have my out where this earlier, basically around where our low of day was. We're getting very close to eclipsing and going above that point, so I may have to exit soon. Basically, if it goes below that, even if we recover, I'd rather take a small L than a massive, ginormous loss, especially because we are down on the day. This one was a little bit risky to begin with. So yeah, I think like, I need to learn more about ATR, but in terms of risk in general, just kind of finding ways to, especially if you take a risky trade, you just have to admit sometimes, you know, hey, this didn't work out how I wanted it to. I did have my stop, you know, what I wanted to get out ahead of time. I have my points of exit in terms of if it was a, you know, W, if it was a win ahead of time. So I did plan to kind of counteract the inherent riskiness of this trade. But, you know, just like reflecting, growing hopefully, and very excited to use more of the actual indicators in my trading in the future to continue to minimize risk.
But how about, forget about the actual ATR itself, Adira.
Okay.
Think about what I was just saying there with respect to actually looking at the candles and seeing, well, how long is each candle? What's the average length of each candle? Is it short? Or is the price range, the range? That's what I'm trying to say. The range per candle.
So I guess like volatility per candle kind of.
Yeah.
Yeah, okay, for sure.
Yeah.
So
I think, if you were to see, question for you, if you were to see volatility per candle, let's just say on average, and I'm not asking you to do the math, but if you were to gauge it, right, and say, okay, I see about 15 to 20 cents per candle, would you really need to use a 75-cent stop?
No,
or would you be able to use a tighter stop?
I would say you'd probably be able to use a tighter stop because we're not seeing that much volatility, right? We're not moving that much per candle, right? Yeah. Whereas, for example, in this Eli Lilly, this candle here was went from 587 to like 591 and a bit. That's a $4 candle. So you would definitely have to use a wider stop. Speaking of which, I'm probably gonna have to exit this trade because I'm still trying to figure out my stop loss situation. But yeah, so basically, let's see if this works. But yeah, so basically, yeah, I think if you look at the candles for a stock, you know, that moves like a Netflix and Eli Lilly, any of those mega caps too, sometimes those will have larger candles. You really have to plan accordingly. And, you know, like that's a good way of looking at it, basically determining how wide your stop loss range needs to be based on how long the candles are.
Absolutely. Thank you. And Pillsbury bringing up a very good point. Thank you for that, Pillsbury, saying by default, most platforms use a 14-period ATR, but you can change the amount of periods it is measuring. Absolutely agree with you. You're absolutely accurate on that. The standardized average true range is a 14-day ATR, but that is by no means a hard and fast rule. You can absolutely change that, but you know you're going to have varying degrees of success, I'm assuming, because less people will be looking at that. A lot of these things that we do, I don't want to call them self-fulfilling prophecies, but they are group or like mass fulfilling prophecy, because so many people are looking at that 190 level as resistance on Apple. So many people are looking at the closing print yesterday on Apple. So many people are looking at the 50-day moving average or VWAP. So it ends up being relevant almost because there's so many eyes on it. There is, you know, an argument both ways on that. So very, very good point. Thank you for pointing that out. Let me just read here in the chat. I was trained to use the number X of ATRs as a stop, says Steve H. Okay. Patrick Langlois, I'd love to hear your opinion on your long-term common stocks. How do you tolerate downside? Sell to find newer growing stocks. What is your strategy? Okay, that's a very good point. I'm just going to digress real quick to talk here a little bit about the long-term portfolio. I buy names that I have high conviction in. We've talked about the C word. It's not the C word you're thinking of. It's conviction.
Conviction buy. Yeah.
Conviction, baby. The whole point is to buy names, number one, that have some sort of market trend behind them, right? So, for example, you know, you may want to diversify a little bit between high risk and low risk. Obviously, the Mag 7 are a little bit lower risk because they've been leading the entire market all year. There's other ones in my portfolio, though, that are definitely not market leaders. Let's take, for example, Li Auto or Nat Gas. My whole pitch here with Li Auto is to take what I feel to be a company kind of driving the middle ground. It's not fully electric. It's not an ICE vehicle. It's somewhere in between. It's you know, trying to take advantage of the specific Chinese market, which has a lot of demand for electric vehicles, but not the charging infrastructure. So I get in at key levels of support, okay? And I dollar cost average at what I see as key areas of support. Now, you're not always going to get the winning end of that trade, but I try to follow high conviction names, and a lot of it is really having your ear to the market. And a lot of it is repetition, 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 knowing what is going to, you know, what the leader of the pack is in that particular sector. A little bit about that. So, you know, I don't want to digress too much here, but the whole point is to try to diversify your portfolio with some higher risk names, some lower risk names, but try to pick the leaders that you see there in your sector. You done your duel with AMD? No. Sean is still holding the short on AMD. He's long Roblox as well. So anybody following along with the Katina Man or long RBLX, several upgrades today.
Yeah, lots of upgrades. They had that Investors Day yesterday.
Yep.
So something of note there for RBLX.
Yep.
Yeah, so in regards to diversification, I mean, I can say for a short term, my perspective on short term in terms of risk for diversification is you have to think of stocks that trade in sympathy with each other, right? Whether that is they're in the same sector, so if we're talking like, you know, Netflix's, AMC, Paramount, Disney, stuff within the film sector, or if you're talking like, you know, the big three auto, or I think ones that really often kind of trade in tandem and you need to watch those mega cap NQ names. Your Googles, your Nvidias, your Teslas. So I've had situations when still kind of now sometimes when I first started, before I was doing the more scalpier kind of moves, and I would be in longer term, long trades around 11 a.m., you know, bright and early, at least for when I start trading, and then you're in these names that they flush at the same time because they're very reactive. They react to each other, right? So it's like you have to be really careful if you are trading two of the same kind of name, because if one takes a hit, sometimes you know multiple of them will. That's why even on the short term, I find it's good to kind of trade names from different sectors, maybe names from different you know, market, like that the NYSE and the NASDAQ, right? Like trading things that are going to be trading in different ways so that if one of them takes a big hit or a big swoop to the downside, you're not getting hit on both of them. Also, speaking of swoops to the downside, I need to discuss the Eli Lilly trade. I did get out I was trying to get out earlier, but I kept getting like part filled, unfortunately. Oh, that is a giant dark pool wick. So I'm very happy you got out where I did. But yeah, so basically, I did get out. We broke below this 485.50 area. I got out. Definitely did take an L on this. But, you know, in the words of 21 Savage, I'm trying to take less L's and make more M's. So we're going to, you know, keep, obviously not M's and, you know, simulated M's. But we'll see how this goes throughout the rest of the day, looking for some more trades, you know. And I was, before we took this dark pool wick, I was seeing a bit of a double bottom here. So, you know, food for thought, but I don't want to rant right now. I want to wait till I have a better sense, you know, evaluate the risk in this. This was a riskier trade. We are down on the day, and I didn't have a huge, you know, amount of cushion to fall back on when setting my stop because we were also kind of near low of day when I entered. So I think this kind of goes back to, like, you know, the whole concept of mean reversion, which we were talking about last week, Sharif was kind of explaining to me really in a really cool way. I think I maybe fell into that trap a little bit where I saw, you know, this was a level that was consistent yesterday. We were near low of day, and I was like, oh, well, we can't, you know, we have to go up from there. Probably should have waited for a bit more candles. But, you know, we live and we learn. I'm not going to lose any sleep over it. And, yeah, risk and reward.
All right, first we got to shout out Diamond Realty of Miami. My man is back in the chat. It's been a minute since I've seen him. Thank you very much for the 305 super chat, by the way, and that's the area code for Miami. Oh, so it's no 305 accident there, baby. What is going on over here? What is this, Ram? All right, let's go down here and see what other people are saying. Sailor Moon, Egypt 2-0 over Djibouti in FIFA World Cup qualifying. Awesome. Good to know there. All right, let's move down here and talk a little bit about the next topic. Keeping risk consistent. All right, let's have a look. What is all these dark pool prints that are coming in on this crap all of a sudden? All right. Yeah, that's interesting there. All right, once traders make a few winning trades, you know, obviously greed can easily set in and entice traders to increase trading size. And that is something that I have been guilty of, obviously, in the past. This is the easiest way to burn through capital and place a trading account in jeopardy. And let me tell you, mine's been in jeopardy before. For more established traders, however, it's all right to add to existing winning positions, but maintaining consistent framework when it comes to risk should be the general rule. So, and this comes, I think, a lot with position sizing. Someone was asking about this yesterday. Like, Sharif, well, how are you deciding, you know, what kind of position size to get into? Well, a lot of it, number one, has to do with the volatility of the stock, right? If it's a small cap gapper that can move $1 at a time and has a 25-penny spread, you best believe I'm going to be taking smaller size, right? Oh, yeah. And then the other factor is obviously price. So even if it's not, you know, moving dollars at a time, if it's a $400 stock like Nvidia is, you know, it does move dollars at a time. But that's just the way that it moves on daily. So one is volatility, obviously. Two is the nature of the stock. Is it blink charging, like what's like right here, right now, that $4 name? Come to the chart right here. Come to the chart.
I swear you do. I know you're not doing it on purpose, but I swear you are.
Right? We have a bit of an upward channel here on blink charging, even though it's down 2% on the day. But yeah, if it's like blink charging and it's moving, you know, about a penny or two, maybe even 5 per 1 minute candle, even though it's a $4 name, the volatility here is obviously not that great, at least currently. So I would not mind sizing into this one. However, if it was a $4 small cap gapper with a 1 million share float, I know that that can absolutely be manipulated by a big account and the bottom can fall off in the same way the stock can skyrocket. So volatility, obviously price, and you know, just knowing the intricacies of the stock. If it's one that you're not familiar with and you see that the spread is super crazy, smaller size. That doesn't mean you're going to get in 100 shares on any stock, irrespective of its character and irrespective of its nature. Keeping risk consistent doesn't mean using the same share size every time. It means classifying the stock, identifying its characteristics, and using the right amount of shares given your experience, Adara.
Yeah, I think also, you know, part of keeping risk consistent might be adapting. You know, I think as counterintuitive as that sounds, adapt to what, you know, what trade you're in, how it trades, what you're comfortable with as well, right? And I think, you know, part of I think consistency too within a trade, like I was mentioning earlier, Sharif was making a really good point when we first kind of started this earlier in the week about how you really need to be careful to make sure that, like, if you're entering a trade with using one indicator, make sure that you use the same indicator when you're exiting, so that the risk you're keeping is consistent within the trade. But yeah, also, like, I think too, the more you, like, you have to consider it too. The more you risk, the more you could also, be rewarded with. But then if it goes badly, you're still unfortunate. You could always reload, right? So for example, going back to the Lilly trade, because we learned from our mistakes here and we do not run from them. The Eli Lilly trade, I did go with a larger shareage or a share size or what have you, whatever word you'd like to use. Because I was thinking, oh, like, we have these levels. That was a mistake, right? Now I can admit, because this was a little bit of a riskier trade, should have used a much smaller share size when I did, probably like a third of what I actually used. And then I should have, if it went well, I could have reloaded, I could have added. Because, you could add to a winning trade, but you can't, undo a losing trade. I mean, you can't undo a winning trade either, but why would you want to? This is a belabored analogy, but the point is,
it's fair.
Yeah, thank you. Like, using risk, really, making sure also that you're adapting to each trade, because like we were saying, the share size you want to use for a Blink or a Lilly might not be the same share size as, like, entering a Tesla or an NVIDIA, right? Like, it really depends on what you're comfortable with, what kind of stocks you trade. I'm not a small cap trader, so I definitely would be even more cautious and, adapting my risk approach if I were to trade something like Blink or that BBLG, which was another small cap runner today, anything like that. Yeah, really, like, what you're comfortable with too. Also, we have a question from Pranaya.
Go for it.
Can you talk about when it is wise to average into position to bring your price down and when it's not? I don't have, like, a lot of experience with this, honestly. With averaging in position, that's like when you enter and then you take more shares lower.
Yeah, dollar cost averaging.
There we go. Okay.
And remember, the general rule with dollar cost averaging is it's fine if it's pre-planned.
And if you have a strategy for it.
Right. So just because I like the 190 level on Apple doesn't mean that I don't like other levels, and doesn't mean that 190 is the only level come hell or high water. No, there are other levels on Apple that I like, and if I'm cognizant of those levels, whether they're price action levels, support and resistance, moving averages, VWAP, what have you, and I see that there has been some respect by Apple at those levels, I can say to myself, okay, fine, let's get short 25% position on Apple at 190. However, there is, I estimate that there will likely be, say, whatever percent chance that it could go up to that 190.50. If that's the case, I want to have another 25% hanging out at that 190.50. So long as I'm pre-planning the dollar cost averaging, therefore, I'm able to know my total risk if all the orders were to trigger ahead of time. It's not okay to add to your risk when you haven't planned for it, okay? Now, you're gonna find yourself doing it. We're not AI, we are not computers, we're human beings. The point is, though, to try to weed that out of your trading. But I know that a lot of people do that. They'll maybe they didn't analyze the chart well enough and they get in at an elevated level. It comes into a support area that they really like, but they didn't look at ahead of time, so they dollar cost average. The point is to do your homework ahead of time. That way, you know where all your DCAs are going to be, your dollar cost average. That's what I mean by DCAs. And you're able to understand the totality of your risk ahead of time so that you can know exactly what your R&R is. We talked about this ad nauseum over the past 3 days. Risk to reward ratio, very important with being able to actually maintain profitability as a trader. So that is what I would say about the dollar cost averaging, but that's not something we're talking too much about today. You have some stuff on emotions. Or
I do. I mean, I'm always thinking about emotions while trading, right? I think it's, this kind of goes actually to a question just asked by Slap Chop Guy in the chat, so I'm going to tie it into that.
Yep.
How to progress when you feel discouraged. So I think a really big part of, like, trading with emotion is, trying not to let emotion get into it, and that's much easier said than done. Because, I've been someone, especially early in the trade, I would, freak out, I'd run, I'd leave a trade, even though we had not entered my area of, where I actually wanted to get out yet. We hadn't gone near my stop loss. I'd be like, oh, I'll get out when it gets to the X level. It never got to X level, and I'd get out, and I missed out on some winning trades that way. And I think part of that is because I wasn't planning as well ahead of time. I was kind of getting in the trade and then deciding where I wanted to set my risk. And I think to some extent, you can manage your emotions through trading by checking them at the door, you know, with the coat check, handing them to the valet, and just...
Speaking of coat check, I need to complain.
Please do.
I went to the Raptors game on Sunday with the Neil and the Katina man and the Brendo, and I brought my bag with me because I drove there and I didn't want to drive back because we drank a little bit, right? So I obviously don't want to drink and drive. $20 to check my bag. What in the actual hell? $20 to check my bag at the Scotiabank Arena. Talk about highway robbery. Yeah, man, I'm not checking anything anymore, man. My God, sorry to digress. I had to complain.
No, it's okay. I think that's valid. And you know, but you know, you don't have to pay $20 to check your emotions at the door. You can save $20 by checking your emotions at the door. I'm bringing everything back, guys. But so yeah, so think about it like that. Instead of paying your $20, you were going to save your $20 by just basically like going ahead of time saying, if it gets to this level, I'm gone, I'm out, I'm losing on the trade. If we get to this level, I'm winning on the trade, I'm taking it and running away, right? So I think that's definitely something of note with regards to managing emotions, and just kind of breathing and waiting. You know, if it gets to the level, I'm gone. And then also the thing is too, is I think that comes into mind too. If it goes like, let's say, par example, if I'm gonna enter Tesla, which I'm not until I see more support here, but let's say I were to enter Tesla, okay? I would definitely get around this 235 where we're seeing a Scotia support. I get out around 237. Why? Because I know we can hit that level. I don't know if we can go much higher than that, right? So then let's say if we hit 237, I take my out, and then we go higher. Or let's say we're at like 236.95. I'm like, oh my gosh, should I stay in? No, because I mean, it's up to you, but I think for myself, I would have to say no because this is already a counter trend trade. Like you have to keep everything in mind, right? While you're checking your emotions at the door with the valet, you have to keep in mind, this is down 3% on the day. This is a risky long to begin with, right? So I need to, you know, whatever profits I can take, I'm gonna take and I'm gonna run. So don't get excited just because you think you could be going higher.
Absolutely.
Sometimes you can leave a piece for the dream. Let's say if Tesla was up like 3%, then that might be, shout out to Sharif for that term, which I love and I've stolen.
It's not mine. I gotta say I stole it too. But
okay, yeah, we're just borrowing and repurposing phrases around here.
Yeah.
But yeah, so basically, like if this is up 3% in the day, then maybe I could, let's say we get to 237, and I do save, you know, a piece for the road. But then, like in this case, because it's already counter trend trade, I set my levels. That's when I need to decide to leave this trade with my profits intact, right? So I think you can basically manage your emotions with regards to risk, not just for when you're doing stop losses, but for when you're deciding your outs as well. There's also BlackBerry. Adapting is a good point. One of the most demanding psychological things for us as humans in general is to hold on to a certain idea that maybe hasn't been true for a long time. Thank you so much for that comment, BlackBerry.
Absolutely.
That's a really good point. And I think that's also part of adapting. You know what I mean? So sometimes, for example, let's say initially, back to this Tesla example. Let's say I did, you know, maybe I will enter Tesla as I'm watching this because we're up like 50 cents since I started yapping about it. But let's say, you know, I initially decided 237. Now we're struggling with 237. You know, you could be like, oh, like, you know, you said you weren't going to leave till we hit X level, right? And it's like, well, that would be in a case of, you know, taking losses. But if we're winning, I can decide I want to take less profit because I am still taking profit. Let's say I decide 236 seems to be the new ceiling, right? That would be an example of adapting in the moment to minimize, you know, I guess minimize risk to an extent and maximize profit, right? So I think that's a really good point. And I appreciate you saying that because you're right. Like sometimes you do have to let go. Sometimes you hold a piece for the dream, but sometimes you need to let the dream die. If the market and the risk is telling you otherwise, just for the sake of maximizing your profit. So I think that's a really good point. I appreciate everybody asking questions in the trade and engaging. It's been really interesting, but yeah, that's my little spiel with regards to managing emotions, and it's much easier said than done, but if you plan your risk ahead of time, I think you negate a little bit of the emotional demons that come to haunt you while you trade.
The demons, oh my God, the demons, the dang demons. All right, let's talk a little bit here about a quick macro look at the markets, guys. We dipped into 15.8. Look at that hold at 15.8, sure. We got into 15.796 and 3/4, but that was a nice 15.8 hold here on the NQ. We're down 1/3%, but we did get a beautiful 15.8 hold. We haven't made a higher high. It's been series of lower highs and lower lows, essentially since, what time was that? 9:55 or so, so about half an hour after the bell. At around that 10 o'clock after the initial volatility. We haven't gotten the higher high. I would say the higher high has to come vis-a-vis an 18.50 break. You had an area about of a 20-minute consolidation at 18.50 as a resistance level. So let's see how we do around that level. VWAP is not much above that either on my chart. VWAP is 15.851. So you have some confluence between the price action and the volume weighted average price on the NQ. Let's see how we do on that. I'm going to bamboozle my way into an NVIDIA trade here. Let's see how we do on that. All right,
Ooh.
But let's talk about the next important issue here, which is managing emotions. Adira started us off. Let me have a look here at my notes so that I can there we go. No, where is it? Okay, can I send it to you for a sec while I just find it? Because I think I lost it. Yeah.
Absolutely.
Yeah.
I think I accidentally just closed the chat, so I will have to deal with that for a moment. So I apologize, chat, for a moment. But yeah, so I will continue, yapping about managing emotions with regards to trading. I did see a question though before I closed the chat accidentally, so I'm very sorry I cannot say what your name was. But you're talking about basically finding a way to quote unquote automate the process of risk management. I will say, I think it really depends on how you're doing it, right? Like, so if it's a risk reward, I guess that requires a bit more math and a bit more time. But if you're using like indicators or levels, sometimes you can just kind of visualize it and see, right? So if I'm, again, sorry, it's Tesla is what I have open right now. If I were to look at Tesla, it'd be a little bit harder for me to plan my out because we haven't really gone much lower than we're seeing this, hint of a double bottom here. But let's say, maybe I look at previous levels on the day, like where do we go lower from here, right? So, yeah, it's a little bit hard to tell on this one, so it might be a bit of a riskier trade, but I think even the lowest we kind of got candle-wise here was, around this, probably 235 even would be maybe my bottom on that, right? So then I look at the chart, let me switch to my 5-minute. Then I'm looking at the chart here and I'm seeing okay, where do I want to get my out? Well, like I said, maybe we're seeing a bit of a plateau or a peak around this 236. Also, you look at the tape, this is kind of where you're struggling at this level, right? So then maybe you decide you want to kind of do your risk and reward within this kind of $1 area, right? It doesn't necessarily have to be a mathematical process. So I think with regards to automating it in a very long-winded way, I think sometimes the more you trade too, I think the better of a sense you get of this. It also depends on what indicators you're using. But I think sometimes you can just kind of visualize it and know what you're comfortable with. Stay within your comfort zone, take a bit of a risk, but take calculated risks, right? And I think that also, back to the point of managing emotions, I think that also helps you kind of manage your emotion when you know you're going into a trade. I know what I'm doing. I'm comfortable. I saw this. This is a trade I like. This is a position size I'm comfortable with. I think all of those little, minutiae of risk management that we've been talking about all week really helps you to manage your emotions while you trade.
All right, guys. Let's get, I got my notes here. Thank you, the Hayes Records. Again, $1.99 super chat. I challenge Obi for King of the Amazon Throne 2024. Obi, you've been called out by name.
That slow
You've been
turnaround.
challenged. Will you accept? He's beating his chest. Put the Kenobi on if you can. Yeah, well, sorry, Ram. I mean, what do you want me to do? She's like, wait. She can't get the button. She'll put Obi on in a second when she can. But we're going to talk a little bit. Where is he? There he is. Come on, Ram. All right, it's not happening. It's super anticlimactic, Ram. It's not. There he is. Obi, give the people what they want, baby. They want that chest beat. There he is. There
Congrats on that 140. That sounds amazing on that Amazon 140 earlier today.
He says he still loves you, Obi-Wan. That's shout out to the Hayes Records for that. Appreciate you there. All right, let's talk here about managing emotions. Now, emotions come into play as a result of, two natural human states, fear and greed. All right? You're either scared to lose money or you're just greedy AF and you want more money. Okay? Well, there you go. The Katina man likes that one. All right, let's talk a little bit about it. Fear and greed are two drivers that influence, obviously, all our daily lives. These influences carry over to trading and can obviously be detrimental because if you let them exacerbate the situation, they're going to take you in the wrong direction. But they can also be beneficial. Traders can remove these drivers by looking at the big picture and planning ahead. For example, fear and greed are obviously identified as the main drivers of the financial markets, right? You're scared something's going to go down. you're hitting the sell button. You have a lot of FOMO. Apple's going to hit 200. You're hitting that buy, right? So obviously it has some sort of effect on the financial markets. This is clearly, obviously, an oversimplification. However, fear and greed do play an important role in the psychology of trading. Understanding when to embrace or tame these emotions could prove to be the biggest difference between a successful trader and a short-lived trading career. And that's what we talked about there yesterday. We want to be here for a long time, not for a nice, good time and then a short time, because, well, that's not really what we're here for. We're here to make money. We're not only living a year, we're living plenty, hopefully, and we need the finances and we need our account not to blow up in order to do that. So keep reading to, here we go. So this is the part. Fear and greed can be commonplace among traders and can also be rather damaging if not managed properly. We mentioned that fear is often observed as the reluctance, and this is what I struggled with a long time, the reluctance to enter a trade or closing a winning trade prematurely. And when I got here initially, and I was sitting back there in the boardrooms back there when we used to do the lessons, we had the previous floor manager, he goes by the name of Greg, Mr. Gregory. He was the guy that would talk a lot about crypto sometimes on here. Some viewers will remember him. I told him, Greg, I chart the levels, I like the levels, and I can't seem to pull the trigger. And he said, you're suffering from a lack of the C word, my friend. You're suffering from conviction. So it's about wrapping your mind about that. You have to be convicted in the trade. Now, how do you it's not about hitting a button, all of a sudden I've got conviction. No, it's repetition, repetition, repetition. It's seeing the setup come once and then executing in your direction or the direction that you anticipated. Seeing it twice, over and over and over and over. It definitely helps with your psychology when you're not just told something as a blanket statement, if A plus B then equals C. No, you actually see it for yourself in real life. It gives you the confidence to take that trade and to put actual money on the line. So that's the part I want to make there. So that is the fear of entering a trade. That's what I suffered from the most. I didn't really have the problem of holding for too long and being greedy. I actually suffered from fear of getting into a trade rather than holding the trade for a prolonged period of time and then giving up a lot of the profits. Greed, on the other hand, manifests when traders add more capital to winning trades or over-leverage with the aim to profit from small moves in the market. And that's a little bit about what you like to do. You like to scalp. So you like to take bigger size for shorter amounts of
time.
Yeah.
The thing is, honestly, though, I don't even really take bigger size. Is the thing. I just scalp. I just do it a lot. It's just a lot of repetition where I will just like scurry in like a little rat in and out of the trades with honestly not that big share size. I need to work on diversifying my share size more. I will say that's an element of risk management that I'm trying to work on that we keep talking about with regards to position size. I usually use like roughly the same. Except for if it's a position that I'm trying to hold longer, then sometimes I might actually use more. So it's kind of the opposite of, how a normal human would be thinking. So maybe that says, a lot about my inexperience or my journey in the world of trading, right? But I think, definitely, I think working on position size. But yeah, so I think in regards to greed, maybe it might be that the positions I think are going to be longer, that I'm going to stay in for a longer time. When I say long, I don't mean like long as in like long or short. I mean like long as in like length of time, just to clarify there. But so I think the fact that I use larger position sizes for those maybe is a bit more greedy. Maybe, and sometimes those don't work out. Like the Eli Lilly trade, again, I used a bit larger position size for that and definitely, blew up in my face. Right? So I think also the regards to risk management, back to, this massive losing trade I had earlier, the biggest thing with regards to risk management and managing emotions with regards to risk is don't give up. Just be like, this didn't work out, don't re-enter the trade. I was looking at this one and I was like, you know what, I want to see more. I want to see maybe a move above VWAP before I get back in. Maybe looking at a short at this level instead because I know we failed this level earlier. I think learning from your mistakes is like, the best way to kind of, brush yourself off, get back up, keep going, right? Because the thing is, you're not gonna, repetition is important, experience is important, and you're not gonna get more experience if you keep beating yourself up. You know what I mean? And that's much easier said than done, because there have been times I've been in trades and I'm like, this is terrible. You wanna hide your head under a rock. try again, right? And like, don't even necessarily count out a stock because, oh, that stock, betrayed me. I didn't do well in this trade. Maybe it's just you weren't managing your risk well, right? Maybe it's just you didn't plan it very well. So I think definitely like being honest with yourself, but not being too hard on yourself either. It's that delicate little balance that can help you brush yourself up and keep on trucking and keep on trading.
Keep on trucking, baby. All right, let's go on here. So with respect, now we know that the fear instinct is kind of a little bit tied to the fight or flight, but with respect actually to applying fear with trading, here's what I have to say about that. Traders experience fear when positions move against them, and this poses obviously a threat to their trading account.
Yeah.
Watching a position move against you invokes the fear of realizing that loss, and so traders tend to hold to losing positions much longer than they actually should. Am I staticky again? A little, okay, sorry. My mic is staticky, I apologize, guys. So you hold on to the position for longer than you should because you have a fear, obviously, of realizing that loss. In fact, this was discovered as the #1 mistake that traders make when daily FX, which I believe they do Forex or they do something like that, researched over 30 million live trades to unearth the traits of a successful trader. They noticed that the biggest drawback was the fear of realizing the loss, and therefore you ended up holding the position against you despite the fact that you had to stop because you didn't want to realize that loss and then, succumb to your fear, rather than understanding that it is just on a per trade basis, that you don't live or die by one trade. It's about the amalgam of all the trades combined that actually define who you are as a trader. A second scenario where fear tends to get in the better of traders is right before entering the market. Despite the analysis pointing towards a strong entry, traders may find themselves bogged down by the fear of loss and end up walking away from a well thought out trade. And that is what I suffered the most from. I would chart. I had a degree of confidence in the levels that I was looking at, but I had no repetition under my belt to know that this was actually going to manifest. Right? Someone told me in a textbook, someone told me on a website that I read. I would watch the Katina Man, the Neil on Trader TV Live when I was still trading at home. They were doing it, but I never actually saw it over and over and over myself. So despite the fact that I thought, this is a good entry, this is a fantastic out, I wouldn't actually end up taking the trades because I was too scared to go through with it because of the possibility of taking that L. And that is something that I suffered from quite a bit. And to this day, I still do, right? I mean, you have to go against your personality somewhat, I think, as a day trader. I think very few people are born naturally with the composition to day trade. Maybe there are. That hasn't been my experience. I think that you really need to go out of your element a little bit, Adair.
Yeah, and I think also with regards to what you were talking about with the fear of entering a trade, even though you have the setup works out for you. I think confidence is a huge part, but it definitely does come from experience, and it also comes from having a plan. And I think, looking at this, I do have a modicum of faith in this trade. I like that we are heading.
You think I'm not going to hit the word when you say modicum?
Well, you said amalgam, and then I was thinking modicum.
Yeah. And I say modicum too. I love that word.
It's a great word.
Absolutely.
Right. So I do have a modicum of confidence in this trade, and it has been bolstered or supplemented with the chart. So we are kind of a little bit high on our friend Netflix here, but Netflix is getting high in its own supply. I don't know what I'm saying, but we're around this. If we kind of get around this 466 area, that would definitely be where I take my exit. But I like this because we are seeing lower lows on the 5-minute candles. Even nothing. We're taking a little swoop down here, and we've generally seen this pattern throughout Netflix today, where we'll kind of have this range and then we'll go swoop to the downside. So now you're thinking, well, where do I want to get out? I want to get out basically where we started this move to the high side. So this is around 460, 430. We could go lower, but you know what? I don't want to risk that. Another area for me potentially for an out would be if I held a piece for the dream. I keep stealing that one. Fine. Around VWAP here because, and why do I say VWAP? We keep using VWAP as this point of support. So I'm basically using all, different levels. I'm basically using the chart for my entrance and exit, albeit different parts of the chart. So I'm using VWAP for my exit, and I'm using general kind of chart pattern movements for my entry, but I'm definitely both cases using the chart. I'm not using tape. I'm not using kind of a variety of indicators. Simply looking at chart movement, what we've done today. So intraday data to kind of make this move to Netflix. I do have to keep in mind though, this one is slightly counter trend in that we are, slightly positive on the day on Netflix, but it's one that I've traded a little bit, so I have to keep that in mind as well. The chart pattern does suggest at least a mild swoop to the downside and know where I want to get out. So therefore, I do feel confident-ish entering this trade because I think the big thing is too, is if you just stare at it, you can stare at a chart all day. And this is another big thing I used to do, especially early on when I started on the midday. And I was going to say when I started trading, but I more or less started trading when I started on the midday. So basically potato, potato there. But the biggest thing would be I would notice a chart pattern and then I wouldn't get in. I'd like get freaked out and I wouldn't enter the trade. The other thing is the only way to learn is to win or lose, is to enter the trade and see what happens. It's experience. And then you also kind of get practice within the trades. Also, BlackBerry, this question I really like. And
go for it.
For both of us here, why is it we get more upset about a loss than we're happy about a win? That's really deep, and I love that question. And I think
Obi and I talked about that a lot.
Yeah, I
we
think
had
I
a
overheard some of
conversation
that.
about that, and I said to him, and this is absolutely, I agree with this, because I said to him, I was actually talking to my dad. I was FaceTiming my dad, and I said to my dad, I'm like, Dad, I really obsess way longer and harder over the losses than I celebrate
the wins.
And, it feels good to win.
Yeah.
You have like a half an hour nice period, but the loss, that'll fester for days.
Oh, yeah. It like becomes like ingrained, and you feel like, why did I do that? Like you're beating yourself up. But the thing is, and like that's very accurate. I think that's human nature. And I think that's because, we are hard on ourselves.
Yeah.
Even if you are greedy, even if you have like, some confidence entering the trade, we are, I think, generally as people, I think we put a lot of pressure on ourselves, especially if you're trading here, in front of others. You want to do a good job. But we're here teaching, and I think, or like at least now, especially with it being an implicitly, or I guess definitely a teaching kind of lesson learning segment, right? And so I think, especially learning live, trading live, there is pressure to do well. But I think the thing is, part of managing emotion, maybe I'll pause at this. I don't know if this is true, but I think part of managing emotion is maybe recognizing that you can celebrate your wins too. Don't get so caught up in the losses that you lose sight of yourself and your trading, because for every loss, maybe there's a couple wins. You just really take stock of that, and remember to celebrate your wins too. So I think that's a really good comment. I really appreciate that, BlackBerry. Thank you very much.
Give a quick market update here on the NQ, please and thank you. We are at that critical level that I spoke of earlier. 15,850 was that area of the higher high. It also coincided with VWAP. We are above that now. I'm not saying we're going to pump into 15.9, but it is an area to be cognizant of. There was about, I would say 1, 2, 3, 4, 5, 6, about a half an hour period here on the 5-minute chart where we couldn't break through that 18.50. VWAP wasn't there at the time. It's there now. We are moving up off that 15.8. It was a beautiful 15.8 hold. Whoever had that 15.8 for you guys, hats off to you. I don't know if anybody took it, but it didn't hold strictly. It got to 15.796 3/4, but that's essentially a 15.8 hold. And look where the closing prints are, far north off 15.8 at around 15.10, essentially. We'll see whether or not we get that run up into that pre-market top, the IB high, as Dan the Man Emmons would like to say. I haven't seen him in the chat lately. He doesn't need to learn how to trade. He already knows. Right around there, that's what I'm looking at. Yesterday's closing print, which is at 15,888. Shout out to all my Asian fans out there who love 88. Do you know that 88 is a good number for Asians?
No.
Yeah, you never seen FA 88? It's a chain around Toronto. Yeah.
No, maybe I'm not getting out enough. Oh my gosh.
40. I think 4 or 44 is an unlucky number, and 8 or 88 is a very lucky number. So shout out to the Asians in the chat there.
Learning a new thing.
Yeah, we're moving up, baby. And this NVIDIA trade is almost $1 in the money. It is, in fact, actually $1 in the money. So we're going to wet our beak here, Adara. We're going to take a little bit of a profit target there if it can get filled, a bit of an area of illiquidity there. But we're going to keep an eye on that. We're going to get to that next topic in a second. 4 means death, says Toan win. Okay, I get that.
Yeah, a couple people saying that.
Yeah.
Interesting. I did not know that.
4 is death, baby, says B.A. Drine. Okay, all right. I didn't actually know that. Thank you for educating me. I do love to know. And there we go. 8, 88, or triple or quadruple 8 means get wealthier. And we're going to spin the money for that as we just wet our beak through that 490 break on NVDA. Let's see if we can get a big boy move up. Let's get to some of the tags here because I neglected to get to them. Sorry about that. Michael Wu, hi Sharif, love the show and the topics you and Adara LePage cover. On average, how many stocks do you focus on a daily basis? I got to tell you, here's what I do. Let me bring in the side chart and I'll show you exactly what I do. Now I got the Mag 7, including the NQ on these 8 charts. Top left, Meta. Bottom left, Amazon. In the middle is Apple and Microsoft, Google and Tesla to the right here, and then the NQ and NVIDIA on the right. I'm always, every day, all day, watching these 8 charts, okay? So 7 obviously are equities, and 1 is a futures trade. Now, over here, you'll see where it says daily movers. I change these bad boys. These are usually the small cap gappers like SGD, and SGD is absolutely flying, Neil. It's up 566%. It is an absolute rocket. It's going to halt again at 320, but that's neither here nor there. These are the small cap gappers. They could also be earnings plays. Like, for example, I could have had Macy's, Oracle, Baba, Walmart, whatever else reported today. On these names, if there are no small cap gappers, I would have them on here. Now, I'm not always watching them at all times. You know, I'll get a feel for which one I like, and then I'll focus on that. But I'll always have them up, whether it's the Mag 7 plus the NQ or the daily movers. So that's just kind of how I do. Look at NVIDIA absolutely flying to the high side there, Adara. Wowzers. We're going to wet our beak there. The market is absolutely flying. We're $2 in the money on this bad boy.
I love when that gets remixed.
Yeah. We are flying up here. The entire market seems to be flying up. NVIDIA chief among them, though, baby. What is that, Neil? What market is that? On what? Oh, SGD. 1 second. I'll tell you in a second. SGD. Neil wants to know what SGD is trading on. It's the NASDAQ. It's ANQ. There we go. Big trade on NVIDIA so far, now up 0.5%. I would suggest to you guys that NVIDIA's chart looks the best of the bunch at the moment. We just made new day's highs, 41.69. Nice. Through that top there. But Meta also looks a little bit good too. Looks like a flat top break through 331.50 on META. But $2.50 winners so far right now on NVIDIA. Keep going here because there were more tags that I didn't get to, and I'm sorry. T blank. It's because to mistake is obvious after, or the mistake is obvious after the trade, while the wins was just confirmation. Very good point.
That's a really good point.
That's absolutely a great point.
Wow, I like
the Hayes record wants me to flex and rip my shirt. I'm not doing that. Let's go over here. Kyle Burdett means you mean all your shirts fit snugly. Yes, they fit snugly. They're stretchy.
Yeah, I know that you were talking about the stretchiness last couple weeks ago or something.
Right? And I had to like prove it by like pulling the shirt. This one is not stretchy though, so I'm not going to be doing that today. But yeah, well, we're moving up nicely here, guys, on the NVDA. Chris RML, is NVIDIA just up to prior resistance? Somebody in the chat was telling me $495 for NVIDIA. Guys, we hit $500 on NVIDIA yesterday. So I don't know where this $495 business is coming from. Maybe we'll do a little bit of charting here and see what's what quickly as we take a little bit of a break from the lesson. Let's zoom out. $495, no, I'd have to disagree with that. It's $493 for me as the first level of resistance. Look at that consolidation top that we dealt with yesterday. The entire morning, essentially, from 10 o'clock onwards until we broke down. We did that dance with VWAP, where VWAP was resistance around 1135. We huadunked. We came all the way down into that 481, about $20 worth of range on NVDA yesterday. So 493, is the first area that I see as resistance, and then I got to tell you, it's that $500 or maybe that $499. I would say more along $500. A bit of a gap in between there as we really tanked unabated to the quarterback.
Unabated.
Yeah. Well, that's for football though. Neil, how come they don't say unabated to the quarterback as much as they used to anymore? They say encroachment, offside, right? But they don't say unabated to the quarterback as much as I feel like they
let the play go if the guy's not
really. Oh, it's a free play.
It's a free play.
Yeah. Good call. Yeah. Aaron Rodgers. Okay, I didn't know that. In any event, I see a bit of a resistance level at 493 and then 500. We'll see how that one ends up going, guys. I'll send it to you, Adair.
Yeah, for sure. So, thinking about, managing my emotions is really coming into practice in real time in front of you all as I languish in this Netflix trade. So I basically, initially I was thinking 466 was going to be my out. In retrospect, that seems or my stop, sorry. That seems way too high. Probably it's just going to be right now because I am not liking what is happening here. Oh, fire alarm time.
Yeah, that's fine. Keep
I'm
going.
also sounding the fire alarm on this Netflix trade. We're out. Yeah, always gonna bring it back on a pun. Yeah, because I decided to get out here because I was already getting nervous when we were seeing these like continuous wicks to the upside. Sometimes that means though that we have a little bit of support or resistance, we could head down. That was not the case here. These wicks meant that we wanted to go higher. I got out. Happy I got out where I did. I still stand by the general point of entering this trade. We did have movement downwards. We did have this kind of consistent range, but it was risky in the beginning because we did have basically the fact that we're positive on the day. Just stuff to keep an eye on, stuff to hopefully learn from. I can reflect on this trade, you know what I mean? And, hopefully come back and not do this again or, I'm just happy I didn't stay too long. We definitely didn't overstay our welcome here, other than the fact that we entered in the first place. So that's what I've got going on with Netflix.
Mo has a question for you there in the chat.
Oh, he does. I did not see that. How much do you use hindsight to comfort yourself, or do you find it hinders more?
Very good question.
I actually need to think about that. You can tell I'm sitting. I always sit up when there's a question or chart that piques my interest. Sharif's called me on that before because I do that.
All good.
But I'm like, But yeah, so I think I wouldn't really say hindsight. It's interesting, comfort or hinders. I don't know. I think hindsight is generally helpful because you can kind of use it to look back and be like, I should have done that better. You know what I mean? So I wouldn't say it definitely doesn't hinder me because I don't think there's anything bad about I don't think there's anything incorrect about looking back and seeing how you could have improved. You know what I mean? I also wouldn't say it's comforting. Because also, you can still realize, oh my gosh, I messed that up. So to answer your question, which I think is a really good question, even though I've just said I don't think it hinders or comforts me, I would say it's a good tool for me. I definitely don't think you shouldn't be too reliant on it, right? Because then you risk falling into that whole, oh my God, woe was me, I'm terrible at trading, walk away and never come back, right? So you risk going into that if you're too reliant on hindsight. That being said, however, Mo, I think that it is good to use it to an extent to kind of be like, this is what I did wrong, this is how I did it wrong, this is what I could have done better. I think using it as a reflection area, a tool with which to reflect instead of something with which to kind of, self-flagellate, I think that is the best kind of approach with that. And I really appreciate you asking that. Self-flagellate. It's like whipping yourself, like being hard on yourself. Flagellation, yeah.
This is the kind of education you get here on these shows.
But yeah, I love that question, even though, I wouldn't say it comforts or hinders me. I would say it's nice. It's a tool that you have to, use with caution.
All right,
so
guys. Sorry to interrupt you, Adair.
Yeah, no worries.
NVIDIA is an absolute rocket ship right now. 492.30, the high of day, guys. We have a low of 483, and that's not even the pre-market price action. As we pump up here on NVIDIA, now we are up 0.2% on the chip, the major chip name. Now we saw Jensen Huang yesterday was at the Microsoft Ignite conference, basically calling AI bigger than mobile, bigger than the internet, and bigger than the PC boom. Whether or not he'll be proven right, history and time will tell. I think Neil has said a very, very poignant statement this morning is that, sure, eventually it will be, maybe not at this moment because AI will basically supplant everything. So we'll have to wait and see what kind of movements we get in the future with that whole thing. I'm just keeping, AI big.
I saw that and it was immediately like.
And then we're going to hit the fail. I spun the money. Oh, wow. Wow.
Two can play that game.
Wow.
And they will.
Yeah, and I tried to get him too. Like, I thought I was all ready for it. He said contractual obligation, so I knew exactly what he was going to do.
Yeah, because I was
and then I
over
didn't
there.
have the Stream Deck software loaded, so I'm like hitting it, and it's not doing anything. He beat me this time. I got to give him credit. Preparation matters, he says, and he couldn't
In
be more
trading and in the weird Stream Deck games, the Stream Deck war.
Right? Okay, let's get back on topic here because we've digressed a little bit, but how can we not? Let's talk a little bit about greed, okay? Emotions, composed of a couple of different things here. There's the fear, there's the greed. I was talking to Kyle Burdett. I think he's suffering less from fear and more from greed. He loves to hold on to his winners, he says, sometimes for a little too long, and that ends up biting him in the rear end on occasions. And I couldn't agree with you more, Kyle. Shout out to you, an excellent trader and a very good active member in the chat. Now, greed is very different than fear, but can easily land traders in much hardship if not managed appropriately. It tends to arise when traders decide to take advantage of a winning trade by devoting more money to the same trade, essentially in the hopes that the market will continue to move in the trader's direction. It can also surface when traders experience a losing trade, but they decide to double down. And this is what we talked about, this DCAing, unscheduled or unplanned dollar cost averaging, in the hope that throwing more money at the problem will help the position turn positive. From a risk management perspective, and this is all we're doing this week, guys, risk management point of view, this is very risky if the market continues to move against the trader, and it can quickly turn into that dreaded margin call. Nobody calls anymore. Yeah, right? Nobody calls anymore. You don't get a call from your broker anymore. They just close your position and send you an email. I haven't been margin called ever in my life, and hopefully that will never ever happen, but I've heard lots of stories. And it's not a good feeling to have. They get you out at a price that's obviously unfavorable. You feel like you don't have control, I guess, of your trading account. And so that's what you want to avoid, unless obviously you're trading on a cash account. Greed has appeared many times, believe me, in the financial markets. One such time was the dot-com bubble. Maybe a lot of the viewers right now weren't old enough to remember that, but I was in high school, so I do remember it very well, where individuals bought more and more and more internet stocks that inflated their value tremendously before it all came crashing down. Essentially, what happened was any company could put .com at the end of their name, and they'd be up 50% the next day. Yeah, it was
I knew the dot-com bubble, but I didn't realize that was how it kind of came to be, is you literally just put, my throat, .com, and then you are now like #1 in the volume scanner. That's interesting.
It literally was.
I need to read more about this, because I was like familiar with it, but not in that kind of like intense way. That's cool.
It was nuts. It was nuts. Look what Neil said. The old trading floor had an office phone on the risk manager's desk. Only twice did back office ownership call the desk. Both were fun stories and not good. One was less than a minute after a number. Well, there you go.
Number 10:30. Probably like 10:30 and 45 seconds.
The number came out at 10:30, like CPI comes out at 8:30. It came out at 10:30. The call came in at 10:30 and 35 seconds. So, and I can't repeat what he just said, but it was is that, okay? So anyway, that's the kind of risk that's that's in the financial markets, and you really need to be cognizant of that. A more recent example, obviously not the dot-com bubble, was Bitcoin. And I'm going to touch, I'm going to maybe instigate a little bit here.
Ooh.
But investors piled, let's talk about it real, into cryptocurrency, thinking it could only increase in value before it came plummeting down. I don't know what we lost in 2022 in terms of BTC, but I know that it almost hit 70. What was it, 66 or something like that? 67. give or take around there. And, you know, obviously we're fighting our way back, but much like the dot-com bubble, a lot of those, like
the
Amazon,
bubble burst. Yeah.
Well, a lot of the companies emerged from it, like Amazon.
Yeah, that's true too.
Right?
Which is Amazon.com. Yeah.
Exactly. And some companies didn't, right? I'm sure that'll probably be the same for crypto.
Yeah.
BTC, ETH, maybe some others.
I think Solana's trying to kind of truck it out here. Yeah, Cardano.
So that's basically the idea there. Fear and greed, very important. Two emotions in trading. They're a little different, but they overlap somewhat. You need to be cognizant of that addition.
Very much.
Yeah.
Also, I would like to thank Samuel Martin for the super chat, $1.99 super chat. Sorry it took a moment to get to you here, but I have it already and pulled up to go. BKKT, 0 shares available to short, 20% short. Thoughts? So just looking at the chart, my thoughts are we have sort of a double bottom here, right? I would kind of wait to see what we do beyond this 117, and then at that point it could be an interesting short. I am also though seeing kind of a defined-ish range. It looks like, you know, let's say we go up a 117, right? I would kind of wait and see what we do there. But also this one is moving very slowly. Volume is under 2 mil. Chart's a little bit up and down. I would say, yeah, 117 to 111 could be a decent range, but it's very limited range. Yeah, I'm honestly not sure how I feel about this short. I have to be honest with you, but I would wait and see what we do kind of at this earlier high, 117, especially with that double bottom in mind. That being said, the longer term on the day, we have lower lows. I'll look at the daily too for good measure. Let's see what we're doing. Okay, so yeah, I mean, honestly, on the daily, we've been kind of up recently. So general trend is down. Let me see, where's the last time we kind of had these levels? Okay, so we did take kind of a plummet here, but I would say the range is still pretty kind of tight between that one, where's this, like 110, kind of 115, 125 area. Could be a decent short, though. I would just say be very cognizant of the range before entering. Also, oh my gosh, such a bar code in the 1 minute. I just noticed that there. But yeah, I think with regards to like fear and greed, I think too, it's really, I think you really have to balance them, right? So sometimes you have to kind of put in fear, put in a reality check, a dose of reality in order to check your greed at the doorway, right? So so for example, you know, kind of watching this, or yeah, you know what? I'll bring up Netflix because I was in that trade. It did not work out, unfortunately. But so part of me was like, oh, like, you know, we'll go down further. That we're kind of chopping and churning around here. We generally have this pattern. We would go slightly higher and then have, you know, a range to the downside. I like range trading. It'll be fine. But I still had to remember, you know what? I cannot be greedy. We already are losing on this trade, right? I don't want to double down either. We got to the point at which I wanted to exit, which is kind of where we had these like previous highs, and I got out. And you know, now we are still kind of chopping and churning. I could be like, oh, I could have gone like lower. I could have gotten like 10 cents if we got any lower here, right? No, like it's better to kind of, you know, minimize the loss because we could have gone higher. I don't know what we're going to do beyond that point, right? You just have to react to what your initially planned risk is. Don't waver from that. And then if you want to get in the trade later, if you do see another set up an opportunity, take it. But also don't just get in again just because you're kicking yourself that the first trade didn't work out, right? Don't try to react too hastily, and make sure you still plan, you're using patience, you're using discipline, and you're managing your risk and not letting your emotions manage you. That would be kind of my take here with regards to kind of greed and fear, and making sure you can actually sometimes use your fear to check your greed at the door, give those keys to the valet, and make sure you are making trading decisions that you're going to hopefully, you know, if not be proud of, that you're going to learn from, and that you're going to be able to use discipline and know that you did your best to kind of manage this trade in the best way you can.
I gotta look at this. I gotta shout out Juan Alejandro Castillo. I gotta shout out. Sorry, Ram. Jeez, look at her yelling at me, bro. Juan Alejandro Castillo. I don't know how to say the last name. Pau. I have the power to move the market. Every time I get into a position, it goes the other way. Well, you just let me know if you're going long or short, baby. Just make sure to get at me before time there, before you get in, so that I can, you know, reap some of the rewards that you seem to be able to. It's a
great comment.
Yeah, fantastic. All right, guys, we've covered all the topics, but you know, because people are coming in and out of the stream. We're going to have to talk a little bit about them again. We'll take a little bit of a breather now to talk about the overall market. Maybe we'll look at some tickers.
Yeah.
So for those who were putting in tickers in the chat earlier, feel free to throw them back in there. And Adair and I will have a look at them for you.
Sorry,
but
speaking of tickers, there actually was a super chat for you about Nike.
Oh, thank you. Oh, who was that from?
Nick
Let me just
W.
Look. Nick Dub. What's up, Nick Dub? Let's have a look at NKE. Let's bring the chart in here. And we know that they reported like about a month ago or something like that. And it was a better than expected report. We heard a lot about you know, them making strides back in the right direction. China continues to be an issue for them. Yeah, about a month ago was before that actually, September 28th. They reported, and look at this. This is the 4-hour chart on NKE, and this is a beauty.
Ooh.
This is an absolute beauty, I gotta tell you. Now it's moving, it was moving counter market. Look at, it was October until, you know, I think halfway through. But Nike, don't tell Nike that because Nike continued to run.
Don't tell Nike.
No, it continued to run in October. It didn't retrace in the same with the same aggressive downturn that the overall market did. Good chart here on Nike, I got to tell you. We broke through that 100 level. We initially had some resistance with that 100 level, but then it acted as support. Look at that move back down. We come back into about 98, but we quickly reclaimed that 100. Right, so you only spent, I believe, like almost just 8 or 10 hours at that 100 level before it was reclaimed, and then you move back down, and that time 100 absolutely held. This is the upward channel. It's been holding, it's been respecting this channel for quite some time. The upward trend line over here. I don't know anything other than what they spoke about on the call. But that was a while ago. I'd have to go look at my notes. The consumer, I don't know. It's a tight one. Let's have a look here at the daily and see what we can glean from that. Okay, so we are at a key resistance level here. Look at what the area where we've been kind of consolidating at from around May, late May, till about mid-August. We had this area of consolidation at the, you know, give or take the $110 mark. We're pretty much at that now. We made a 110 2/3 high back on November the 8th, and we have a 108 high today. I would say Nike is an interesting one if we really get above the top end of this range, because then we could be looking at 127, 128 in the face, which was the high end of the range in late spring. However, on an intraday basis, if that's what you're asking, nothing for me on an intraday basis. This is more of a swing trade for me. Nike, it's not a hard and fast rule unless there's some news catalyst, but it's not typically a day trading stock. It's got all of $1 of range today with a 107 low and a 108 high, but I would suggest to you that that was the outlier, that the majority of the range is tight, like 30, 40 pennies. Look, we talked about this at the top of the show, but looking at the range of the candle to kind of gauge what the volatility of the stock is, taking kind of like the aggregate or the average of the candles here, their range, and trying to glean from that whether it's volatile or not. In this case, I would tell you this is a perfect example of lack of volatility. So for me, on the daily, intraday, Nike is not for me. But look at this outlying move yesterday. I mean, it's making me look a little silly by saying that. That was a monster move yesterday on Nike from that 106 2/3 into that 109 area. So it moved like nicely, $2 and $2.02 there. But yeah, Nike for me is tradable typically on the daily. I really like this uptrend line, especially since earnings, but we really need to get above this 112.5 level in order to break away from that range. We'll have to wait and see. Looking here, Diamond Realty of Miami wants me to have a look at Cisco. Gonna keep pushing. Let's have a look. CSCO, daily on CSCO. So this one reported, yeah.
Oh
this one reported yesterday. I have notes on it, but you know, it was a good look. It's not a. I wouldn't say it's a bad report. Essentially, what the CEO was saying here was that there was so much ordering, so many sales for AI and cloud-related data center. Building up of your cloud infrastructure and your AI infrastructure over the previous 3 quarters, that in this quarter, the guide for the 4th quarter was weak because they're basically installing all that software and all that hardware that they bought from them, and it's going to take some time before they need anything else. So the guide was a little soft. It sold off on that. Personally, I think it may be a buy down here, but that's obviously not financial advice. We do hold that general level that we made in late April, mid to late April, early mid-May, around that $45 area. We do hold it. It was a quick algo wick right south of that, around 44.5, 44 2/3, but it was quickly bought up. Let's look at the intraday look at the 5-minute time frame here. Yeah, that big boy Huadunk at 4 o'clock yesterday. Really, we haven't really moved out of the range of that. There's obviously a bit of a gap between where we're trading at now, 47 and change, or 46, just a little bit below 46. And the price action from yesterday, which is around 53 or so. I think we closed off at 53 1/3. Nothing for me intraday on this. I got to tell you the truth. It's doing that dance with VWAP, a little bit of a high. We got a couple of lower highs over here. Then we made another higher high. So for me intraday, I've got nothing on Cisco. But I do like this name for a possible swing, especially because I think, the reaction was to sell on the weak guide. But you may end up having, a better than expected Q1 of 2024. We'll have to wait and see. Or sorry, yeah, Q1, because they already guided weak in Q4. So let's see what else people are talking about. Nick Dubb, I have mid-January calls, okay? Crap. This thing always goes down on its own.
It likes to move.
I know.
Yeah, it likes to.
Nate, how do you feel about Roblox long? Yeah, let's have a look at RBLX. You want to have a look at that one?
Yeah, let's look at RBLX. I also had DoorDash up to talk about because some people mentioning DoorDash, and
okay.
I have DoorDash up. So I'll just do DoorDash first, but I will talk about Roblox. I promise you all. DoorDash is an interesting one. It kind of looks like fangs here. It's trying to do like the roundy face or the smiley face, if you will, around VWAP, but it kind of has more of like a fanged shape situation going on here. Also, with regards to what we were kind of mentioning with how different stocks react to different indicators, DoorDash absolutely interacting with VWAP today. It might not be like right now, kind of a little bit less, kind of chopping and churning around that 95, 95.20, but definitely interesting around VWAP earlier. I want to look at the daily on DoorDash as well. There we go. Okay, DoorDash is really interesting on the day. It looks like we are trying to climb up, doing the elliptical, doing that, the step to the upside here. Let's find, I know we did have an upgrade for DoorDash. Was it Deutsche Bank? It was Deutsche Bank. With a price target of $125, they initiated coverage. Right now we're trading under 100, so that is a very nice price target indeed. DoorDash is liking it. It's been kind of doing its thing, 21 to the upside recently. Anywho, we're actually slightly down in the day though. I think though with regards to, I'm on the 10-minute, but I think the 10-minute's fine. What I am seeing though on the day is we are seeing lower highs. Here is a high. Here is a lower high. We chopped around VWAP. I think, honestly, I might keep my eye on this as a short from 95.1 to like below VWAP here, because that would be roughly $1. In terms of where my out would be if we get too high and I'd like to leave, I mean, honestly, maybe this earlier high of 96. Because, if I'm going to use the lower highs as a reason to enter, I have to use them also when I'm planning my exit and my out. Just to bring it all back to risk management. So yeah, DoorDash, appreciate you bringing that up in the chat, everyone. Roblox time. Another stock that had good analyst movements and is saying goodbye and sayonara as a result. Heading to the downside, very counterintuitive here today. Although pre-market, we were kind of, chopping around. We had this really nice, beautiful movement, about an hour, half an hour before open. Then we swooped to the downside. It's been very rangy since then. I think for this one, if you had that short here basically from open, you were blessed. That was a really nice move. Congratulations. Other than that, I would find this one kind of hard to play unless we break out of this range. That being said, if we do kind of show support around this 37.70 and we get around VWAP, could be an interesting long. This is also a stock that seems to be interacting with VWAP today. So thank you, everybody, for bringing up Roblox here. Let me see if there's anything else going on here.
Remember the other one that I was asking, Roblox?
Roblox.
What was the other one that I asked?
I thought it was Roblox.
Was it Roblox? Oh, okay.
I thought it was. I could be wrong though. I'm very sorry.
Yeah, no, I
But-
think you're good on that. Yeah, it is. That was Nate. Okay.
Okay.
I have to answer this one quickly here for Jay Lee on coin. What was Jay's question? Let me just move back. Jay asked, look at coin short now. BTC is down $1,000 today from 37.5 to 36.5. In my humble opinion, coin should be down, 90 to 90, not 97.5 like now. Bring it up. I think we have a $3 short here. Well, let's have a look.
I like the specificity. Like,
Yeah, I don't know. Hey, that's the thing. Like, look, we're negative on the day. I get that. But look at this chart pattern. I mean, we dip into 94.5. There were obviously buyers. We're above VWAP. Yeah, sure, we're below yesterday's print or closing print, excuse me, at that 98.15 or 98 and change. But, I don't know how exactly I feel about taking a short in the face of this pumping market when the market's about to knock on the door of that 15.9. You've got, everything is turning up here, especially in coin. What I'd wait for, Jay, is, that confirmation that we're going to head sell side. I don't want to try to guess the tops here. You know how I feel about that. I need to see a trend change before I weasel my way into a trade. So, Jay, I'm going to have to say I'm going to stay out of this one, but I do respect what you have to say with respect to how much we're down on BTC and how much we're down at coin. Look at NVIDIA. It is absolutely flying to the high side over here.
Woo!
We're going to wet our beak here, almost in a $4 winner over here, as this is absolutely flying to the high side, 493 on NVDA as we move back into 15.9. What a move on these markets off that 15.8 bottom. We're right back at that 15.9, like a couple of points below it. Geez Louise, do we see 16 today?
Turn down for what?
The
Roblox.
Katina man came in, all of a sudden things got more hype.
NVIDIA for what?
Yeah, we are moving up. New high a day. Did we just get to 15.905 and 3/4? NVIDIA high of day. You've got Amazon, the Amazonian at high of day. Meta is at high of day.
I like how it's Amazon and the Amazonian.
Where
It's
is
both
the
Amazon
Amazonian?
and OB at high.
I saw
of
him
day.
back there.
I was talking with Chow.
The Amazonian is talking with our algo guy back there. Yes, we do have an algo room. Yes, we have an entire
I didn't realize
algo
that's what that room was.
That's the algo room.
I just see people leave the room, and I'm like, what room is
Yeah,
this?
because the algos are
Guy
trading.
also thanked me for long bias from last Tuesday.
The algo guy, who we won't disclose his name because he may or may not make an appearance on the show later in the future, it was thanking the Katina man there for his long bias on the market in general.
Turn off all the short algos.
He told the algo guy, shut the short algos, it's long, and he was grateful to the Katina man for that. So there we go. Good move up.
They're long intel from the morning.
And the algo guys are long INTC Intel from the morning. Anybody interested in that? Want to update you. All right, guys, it's time to go back into some of the trading lessons here. Ram, if we could circle back. Thank you very much. Optimal stop loss. Let's get to that, Adira.
Yes.
Let's start again.
Fabulous.
Yeah.
So yeah, looking at, I think for ultimate stop loss, it's kind of looking at the chart and seeing, what levels actually make sense, right, to enter and exit. It also depends on how you set it. You can, use different indicators. We were talking a little bit about looking at indicators when you decide to set your stop loss level. If it's going to be like, basically, if you want to look at VWAP and see, if we go below VWAP, then I have to be out. I have Pan W up here because Elon in the chat was mentioning Pan W as an entrance at 239, which I think is solid. But also I'm bringing this one up because, maybe if you were going to enter that trade, your stop loss would be like, if we break below that lower low of like 237 earlier, or 236, because we had that flat bottom there, right? It's really looking at the chart and deciding for whatever reason you're going to enter it. I can't speak for Elon in the chat. I have no idea what the point of entry was, but I think if I were to look at this here, you have this flat bottom, it makes sense, and then maybe use the earlier flat bottom where we first, swooped off from, as what you're going to be kind of using as your guiding light with regards to risk management. Also, too, another aspect when you're looking at optimal stop levels is considering the risk of the trade you're in the first place. So I'll bring it back to myself and the Eli Lilly fiasco. It wasn't that much of a fiasco. We adhered to our losses. We didn't. It's not that much of a fiasco, but we're going to learn from it right here. We were down on the day. I took this long because I thought I saw a flat bottom here. I knew we had this flat bottom earlier. I knew that this level was consistent from yesterday. But the issue is I probably should have waited more to see more confirmation. But, I did set my exit because I got it a little bit above where the earlier flat bottom was. I got out when we hit that flat bottom again because I was looking, if I was going to enter based on what the flat bottom was, I should be also exiting based on maybe where that bottom is, right? So setting I guess this also, I'm getting ahead of myself into keeping risk consistent. But I think, choose your stop loss level. There's not going to be a one-size-fits-all approach. It depends on how you're entering the trade and why you're entering the trade because, it should be kind of like, a balance, a symmetry between the reason you're entering at what level you're entering and why you're also choosing to exit, right? Using kind of the same parameters there so that you have a nice, symmetrical, cohesive trade. I think, with optimal stop level, I think it really does. It's not going to be one-size-fits-all approach, but it has to work for you. And again, it really does depend on what you're trading, what stock you're trading, and what your experiences is with that stock as well.
Yeah. All right. Let's talk a little bit about the technical reasons where we want to have an optimal stop loss. Okay, so the first one we talked about was using moving averages, but it's not a willy-nilly thing. We're not just going to use the 50 period or the 200 period just because we got them up on the screen or because someone told us to. There has to be a level of respect between that equity and the 50 period or the 200 period. You have to see areas where it's actually respected in the past. If it doesn't, if it blows through it, if it if it doesn't really respect it, whether on whatever time frame you're looking at, it's not the one to use. However, if it is, it may be a great one. You see Sean using the 200 period. The 50 period. You see me using the 200 and the 50 period. I use exponential moving averages. Some other people use simple moving averages. There's always that debate between the two. In case you're wondering, exponential moving averages weights the recent price action more heavy than the more distant price action, whereas a simple moving average doesn't make a distinction between recent and more distant. So, it really depends on what you want to use. I don't know what the industry standard is. I think, big money uses simple. I use exponential. It's just how I've always done it, and I really haven't seen a need to change. So, moving averages, setting stops above or below, depending on whether we're going long or short, at specified moving average, and basically, it's not really rocket science. You see where the moving average is on the chart, and you place a stop there. Now, there is some housekeeping that you typically have to do because the moving average is not static. It is quite dynamic, meaning that it moves when the price action moves. And the more volatile the price action, the more volatile the moving average will be. So just because you put in a stop at wherever the moving average was at some point in time doesn't mean that it gets to sit there. You have to keep adjusting it to where the moving average is. Now, on my platform, I can just drag and drop my stop, right? I can just go on the chart, I click that bad boy, and I can move it up, or I can move it down. Some platforms let you do that, some others don't, okay? And that's what you need to know about that. Now, there are other areas that you can place your stop, the optimal areas. Support and resistance. Support and resistance to me is kind of the holy grail, okay? I respect it more than moving averages. That's just my opinion because it's actual price action, especially intraday.
Yeah, intraday is super important.
Right? So support and resistance, you set your stops above or below for long or short positions. We talked about the 190 level on Apple and how Neil had absolutely earmarked that 190 short on Apple. However, he put his stop at the pre-market high of Apple, which was 190.21. That was obviously a resistance area there earlier on, and that's why he chose to place his stop there, okay? So placing your stop at support and resistance, and that one doesn't require as much housekeeping, right? Because that resistance level is there and it's static, right? Until it changes later. But you don't really need to keep moving it like you do with your moving average stop or your VWAP stop or what have you. So support and resistance are very good areas to place your stop loss. And then the other one, the more complicated one, is the average true range. So ATR essentially measures the average movement in any security over a specified period and provides traders with a minimum distance away to set their stops. The industry standard is 14 days. It's a 14 period, or not even days, it's 14 periods because there are some non-trading days in the week, obviously. And you can, it's not a hard and fast rule. You are more than welcome to change that. Just make sure that whatever you're changing it to has some foundation in fact. You're not just changing it because I want to trade off the 10 and I feel so inclined. Well, that doesn't mean anything, right? So ATR, another one that you can use to set the support and resist, or sorry, your stops, your optimal places for stops. Now, if you don't want to use ATR, the other kind of method that I was suggesting earlier is to actually look at the equity itself and to say, okay, let me glean. Have a look at the chart, Raymond.
Great word.
I didn't say chart this time. I was very happy.
Oh.
Yeah, ooh, I'm gaining. Let's have a look at NVIDIA over here. Obviously, there are, there's larger candles and there are smaller candles. But on average, what am I seeing? And it's not always the same. I mean, earlier on, obviously, between 9:30 and 10:30, you're going to see wider ranging candles, okay? And then look at this. They become tighter as the price tightens up and the volume decreases a little bit. The whole point is to look at the average range of the candle and say to myself, well, look, it's about, on the 1 minute chart, 50 pennies of range per candle on average. That should influence where you place your stop. You're not going to place your stop 25 cents from your entry if each candle is averaging at least 50 pennies. It just doesn't make sense. You are more likely to get stopped out than not if you employ that kind of tight range on a very wide-ranging stock adair.
I think it's also kind of about like knowing if you know what stock you're trading too, right? And I'm not saying to stay in your lane, but I think the more you kind of look at the stock and plan ahead of time, the more you can kind of decide, I know how the stock runs. I know kind of how I want to set my range, right? So I was mentioning Eli Lilly earlier. That one has some 5-minute candles that are like $4 long. I'll bring that up just to kind of show. So where you're gonna have to really think critically about your stop on that, right? Like here we are. This was like, oh my God, this was like a $5 or $6 candle to the downside in a 5-minute. This is a 4-minute candle to the upside on the 5-minute. So it's really about like if you're trading this kind of stock, you're going to have a wider stop loss because the spread on this is always living on its own planet.
Yep.
Yeah, I think it's really just about knowing the stock, taking time to look at the chart ahead of time and decide, how do you want to enter. And I also think part of this is like calculating your risk too, right? And you're calculating your entry and your point of, and your stop. So when I'm looking at this Microsoft, this one, we did have kind of a double top, but we also had, if you look at earlier, we had lower highs. Or we had higher lows. I always do this. But so I'm looking at this, I'm like, we could go higher. That's why I was kind of torn between shorting or going long. But the thing is, we're positive on the day, which is why I decided to go long. If we kind of break below this just under 375 here, I'm probably out. Why? Because that was when we were seeing the last kind of plateau here. That was when we were last kind of fighting a battle with price here over around, we're getting pretty close to where I'd like to exit right now, right? So basically, because I'm using the higher highs to enter, I also want to use them when I set my stop loss level, which I guess, again, goes back to keeping risk consistent. But I think that's my optimal stop loss level for me and for this trade. Because like I said, it's not going to be the same for every person. It's not going to be the same for every trade. It's not going to be the same for every stock. You have to set the level that you're comfortable with, where the risk is what you're comfortable with, and that that feels sustainable for you. Because just because one trader, just because I'm going to do this on Microsoft doesn't mean everyone else is going to do this on Microsoft, right? So it's really about staying true to the levels, but also adhering to whatever your stop level that you set is. Speaking of which, we're probably going to have to say bye-bye to Microsoft.
Yeah, absolutely. And quickly here, before we go on to the next topic, we got, for now, a 15.9 rejection in the same way that we got that 15.8 bounce in the morning. Look at that. Just a perfunctory break of the level. We go up into 15, what was that, 902 3/4, in the same way that we dipped only into 15.796 3/4, and we're coming down aggressively. 25 points now removed off that 15.9 touch. A bit of a double top brewing here. We could see a big boy move down, maybe to make new lows. Bit of a double top again. Let's see how we trade when we get to VWAP and that general 18.50 area. Do we find support at an area where we had previous resistance, which would be that 15.850 area that we talked about? Or are we going to continue to trend down, break it, and come back into 15.8? Keep your eye on the market and how we trade around here. 15.9 rejection. Okay, next topic. We've talked about the optimal area for your stop loss. Now we're going to talk about keeping risk consistent. Okay?
Yes.
Once traders make a few winning trades, greed can easily set in. The Katina man likes my hand gestures. I can see that.
They're
He's
good hand
mocking me
gestures,
over
yeah.
there. He's eating up a storm and he's mocking me. What do you got over there? What is it? Eggs again? It's eggs again.
It's egg salad.
Oh, it's egg salad. Okay, well.
You have a problem with egg salad?
I don't, but I have eggs far too much. I don't want to have it for lunch as well. Well, I mean.
Well, you do. Yeah, you have the breakfast egg.
I mean, I need to have like a zillion grams of protein a day. There's only a few ways you can get that. I can't be eating chicken in the morning.
Yeah, you can't be eating like the meat or whatever all day. That's fair. That's fair.
Show the Katina man and his food over there. There he is. There he is. Come on. There he is. That's what. It's a pretty good looking dish. I'm not gonna lie. Yeah.
The pepperette right there.
Is that
The
a sausage?
pepperette?
Is that
Pepperette.
Pepperette. Okay. Well, whatever. It's good. Yeah. So we digress. Coming back to what once traders get a few good winning trades, greed can easily set in and entice traders to increase their trading size. This is the easiest way to burn through capital and place the trading account in jeopardy. Obviously, for more established traders, however, it's all right to add to existing winning positions, but maintaining a consistent framework when it comes to risk should be the general rule. Again, it's a little different when you have a lot of hours under your belt. When the big kahunas are adding to their positions, it's because they have umpteen amount of hours of experience. That shouldn't be your go-to move when you are a new trader. You do not have enough trading experience. You do not have enough trading time, screen time. You need to adhere to your rules and take the loss and just allow it to manifest. But when you have more experience and okay, I missed one level, I know that this level is another important one, that is different. That comes with a lot of screen time. So I want to really make that point about keeping your risk consistent, Adair.
Yeah, so I think too, I think part of that, like I was saying earlier, is part of keeping your risk consistent and staying consistent with risk is realizing that risk might be different for every trade, but as long as you approach it in a consistent way, then you're golden, right? So like the amount of size you're gonna have in a position really might depend on the position. Like for example, as we were saying, small caps, especially for myself as someone who doesn't really trade small caps, I'm gonna probably have a smaller size for that, right? Because I don't want to go overboard. I don't want to throw the baby out with the bathwater, to use a really bizarre saying. That is a real saying, unfortunately. But yeah, you know what I mean? Like you have to look at what the charts are giving you, or whatever your indicators are using are giving you, and react accordingly. And then make sure that once you've set your risk, that's your risk. Like, so for example, in this Microsoft trade, we were kind of dilly-dallying around that 375. I could have left, or I could have stayed in, but I was like, we did break below the 375, which is why I left when I did. Now, you could be like, oh, but Adara, this trade is going to, I don't know why I did that voice, it's going to continue to go up. It's like the devil on my shoulder whispering, that's why. But you know what, like I can get back in if I want. You know what I mean?
Yep.
But I'm not going to like be inconsistent with my risk, because then if we go lower, I only have myself to blame because I didn't do what I said I was going to do. It's about conviction. And whatever, for better or worse, sometimes it works out, sometimes it doesn't. We were talking about hindsight earlier. I think it was Mo in the chat had a really great question about hindsight. And I think really you just have to use it to learn. You know what I mean? So keep your risk consistent in the meantime. And then 2 hours later, you can be really upset when you're walking home thinking about, oh, that trade, if I had only gotten at this level, or if I had only reloaded my shares. Like, you can be greedy later. Do you know what I mean? But for now, you have to be really grateful that you did stay consistent with your risk, and then hopefully it will pay off. So that is that is kind of my point there. I think that is That's my take there. Also, for the people in the chat, that is a real phrase, throwing the baby out with the bathwater. I promise I did not make that up. Legitimately.
I've heard that before.
Thank you. Yeah, because the people in the chat are like, what is happening? This is bizarre. I'm like, it's a real phrase. But yeah, so there we go. Now, of course, Microsoft's running because that is what the stocks do. But, you know, hindsight is 20/20, but not losing more than you want to is even more than 20/20. It is.
You know where 20/20 comes from?
20/20 vision.
Yeah, I know, but why do they say 20?
Because it's like
you're 20 feet away from the thing. From the.
Oh.
Yeah.
Oh,
wow. In Egypt, they say 6 on 6 because it's 6 meters.
Oh, I love that.
Because Egypt is like metric. They don't. They don't.
So
jive
then,
with
but then
editorial
how does the prescription for vision? So we're getting off topic here.
Yeah.
How does your prescription in Egypt then would it then correlate?
It's the same thing.
Oh, they give you the same numbers.
Yeah.
But
Well, no, it's like minus 1 point whatever.
Oh, okay.
Right, like minus 1.5 or whatever.
Yeah,
I'm
whatever.
Minus 2.
Oh, I'm minus 6 and 6.5.
Holy cow.
Yeah.
Jeez. Yeah, minus 2 and then minus 1.75. They're not the same. But that's what that is.
Most people's eyes aren't.
People are saying that's not true. Maybe it's not. That's what I heard. It's not like I'm not losing sleep if I'm wrong over this, by the way.
Yeah.
Probably some optician in the chat that knows. Like.
But no, the 6/6. That's interesting. I never would have heard of that.
That's what I was told. That's what I was told. Egypt won 6-0, by the way. Mo Salah scoring 4 goals. Oh baby. That was a big dub for Egypt over Djibouti today, so that's good for the World Cup qualifying. We need to get back into that World Cup, baby. And yeah, I just wanted to mention that. Somebody, Sailor Moon? Who's that? She is the one named Sailor Moon in the chat. She is the one, Sailor Moon. Yeah, I know that song. All right, guys. Intel, I looked over at the Neil and the Katina man there. Intel is absolutely rocketing up, guys. It's up 5 3/4%. Kill me now. Sorry, man. I'm sorry. I won't sing again. I promise. I apologize. But Intel absolutely rocketing up. I saw this coming in my headline. I don't think this is it, guys. U.S. announces new partnership with Philippines to explore semiconductor supply chain opportunities. That came in on Intel's blotter. I really don't think that is the reason we're rocketing up here. But we just made a huge move down, rejecting that almost 43 level. Here we come back into 42 3/4. We'll have to wait and see how this one does. But in any event, Intel, I just want to mention, very strong on the day. All right, next topic. Let's go to managing emotions. This one takes a little bit longer to talk about because of the different fear and greed and the differences between the two. Essentially, here's what the deal is. Let's define fear. Obviously, everyone knows what fear is, but we know it's somewhat related to the fight or flight instinct that every one of us has, pre-programmed, is what we feel when we recognize a threat. Traders experience that fear when positions move against them, as this poses a threat to their trading account. Goes without saying, right? Watching a position move against you invokes the fear of realizing that loss, and so traders tend to hold on to losing positions much longer than they should. In fact, it was discovered that that was the number one mistake amongst new traders when Daily FX researched over 30 million live trades to unearth the trades of a successful trader, or traits, I should say, of a successful trader. So it's really about holding that loser much longer than you should out of fear of realizing that loss, rather than understanding that every trade should be looked at as an individual endeavor, and you should allow it to stop out so that you can continue to be able to trade in the future and not blow up your account. And as I say that, Intel is about to break 43. Again, Intel very strong on the day. Whoever's involved in that one, keep your eye on INTC as it continues to rocket up here. So yeah, fear, big issue. A second scenario where fear tends to get the better of traders is right before entering the market. That was my issue. I talked about this, a lack of conviction. Despite the analysis pointing towards a strong entry, traders may find themselves bogged down by fear of loss and end up walking away from a well thought out trade. That is the issue that I suffered from over and over and over. And I mentioned this earlier on the show, but I'm going to mention it again. When I first got to this trading floor and we were doing the trader kind of lessons in the back, the floor manager at the time, Greg, I explained essentially this situation to him, and he's like, you are suffering from a lack of conviction. You need to figure out a way to fix that. And personally, the fix came from screen time.
Yeah.
More and more screen time, more and more repetition, Adair.
Yeah. So would you argue then that Greg convicted you of a lack of conviction?
He showed, I like that, you set me up there. He showed me, I think, what I needed to do.
Yeah, no, that makes sense. Like, and I'm just, you know, making a dumb joke.
No,
but no,
fine.
it's a very solid point, and I agree.
Yeah.
I think screen time, and again, like, you know, looking back and reflecting and being like, what could I have done better? Par example, this Microsoft trade that I did end up getting out of when it looks like we are still, you know, shooting to the upside. I guess shoot is a strong. Well, yeah, we're shooting, we're swooping. We're hopefully doing something to the upside, but I got out because we kind of dipped below that flat bottom here that I wanted to get out. But in retrospect, maybe I should have waited a little bit lower. I was so, you know, in this case, I convinced myself that that I was wrong in the long. I think, you know, like you were saying, I faked myself out, and I probably put my out a little bit too high. I probably should have had it this more consistent flat break, which would have been honestly not even that much lower than where I entered this 374.60. We still would have been like less than $1 out of the money had I set my stop there. But instead I set my out too early. So then when we kind of got out, I ended up getting out too early. We ended up going to the high side. So I can learn from this, and I'm not going to beat myself up over it too hard. I'm just going to learn and reflect. And, you know, more screen time, more time looking at charts, more time reflecting on charts as I, you know, hopefully kind of branch out and look at different indicators, especially with next chart week coming up here. Really excited. You know, maybe we kind of learn from trade. So I think the biggest part to managing your emotions is you have to manage them in the trade by making sure you set up your stops and your outs ahead of time, but you also have to manage them after a trade by like telling yourself, you know what, I learned, or I'm going to learn from it, hopefully. And sometimes you do learn more. Someone was saying this in the chat a while ago, I forget who, but that you actually, you learn more. You learn more from your losing trades. So from this trade I learned, you know, next time take more time to look at the chart and maybe set a different stop loss, because honestly, I probably got out way too early here. So yeah, learning, reflecting, and then also manage your emotion before you enter a trade. And instead of psyching yourself out, you know what? Like the setup on Microsoft was still good. I'm still happy I entered this trade. I am, you know, a little bit peeved that I set my stop where I did, but we're going to learn and we're going to grow. And that's what trading's all about.
43 coming in on Intel. There's big size on the book at that 43 level. Watch out for their 5.88% to the high side. Good move on Intel. Still not really seeing exactly why this is moving up, but it's an absolute rocket ship today. Neil, is this still within the upward channel? Or did it break through it? The upward daily. It broke it $2 ago, so we've broken through that upward channel. And it pays really to go over this. I know we're talking about this, but this is a very important trade over here for a lot of people. I see a lot of people talking about this in the chat. Let me show you exactly what I'm talking about by that upward daily channel. Neil and I were looking at it this morning, and it was absolutely holding on to it tight. This is what it was, okay? Let's adjust this bad boy over here. Oops, there we go. It was essentially something like this, okay? And yeah, it's absolutely ripping through it right now. So big, big daily move on Intel. And I don't want to say it was one day. It's been 3 big green candles in a row here as they really look to change their modus operandi and look to foundry as opposed to chip design. And the market's liking that. The market's liking that in spades. And the price action is definitely reflecting that right now. Intel having itself one hell of a day. Who can complain about that? Good American company, and you hate to see them go by the wayside because they didn't adapt. So good move there. All right, greed. We talked about fear. Now we're going to talk about the other emotion, greed. Greed is very different to fear, but can easily land traders in just as much hardship if not managed appropriately. It tends to arise when a trader takes advantage of a winning trade by devoting more money to the same trade in the hope that the market will continue to move in the trader's favor. Greed can also surface when traders experience a losing trade and they decide to double down in the hope that throwing more money at the problem will help the position turn positive. From a risk management perspective, it's very risky if the market continues to move against the trader and can quickly turn into that margin call.
Oh, yeah, I love the phone prop.
Yeah, come on. If I got it right here, I'm going to use it, right? But that's the look there. Look, if, you know, And this is what Kyle and I were talking about in the chat. He's like, look, man, you know, I don't really have that issue of punching in on, he takes the ES. It's about letting it run too much and, you know, not taking the profits where I should, because your fear of missing out, your fear of missing out on those profits if it continues to run. You have to manage your emotion, and you have to say to yourself, I've earmarked this resistance level as a profit-taking level. Take the profits there. Leave a piece for the dream, but don't hold the whole thing, right?
Yeah.
And that, you know, that may end up working well for you once or twice. It continues to run. You profit big from it. You're up like some whatever 100% on the day. But does that happen every time? Can you successfully repeat that every time where you continue to hold unnecessarily beyond the areas that you've earmarked as resistance? Is that going to be a successful strategy in the future consistently? I would suggest no. So that's very important. Greed has appeared many times in the financial markets, and one such time was obviously the dot-com bubble, where individuals bought more and more and more internet stocks, inflated by their value tremendously before it all came crashing down. We talked about that. We talked about, you know, just the mere fact of putting .com on your name would elicit a huge move the next day in your stock price. We kind of correlated that a little bit with the move up in Bitcoin during the COVID pandemic and the 67,000 that we saw at the time. But much like some of the companies that emerged from the dot-com bubble, like Amazon and some others, there are going to be likely these crypto names that will emerge, and some others that won't. Some will go by the wayside. So the whole point is, don't give in to too much greed, Adara. Take the profits where you have earmarked resistance.
Yeah, absolutely. And I think the other thing too about greed, it's like also holding on to trades too long, right? Like it's a double-edged sword, literally. Because if you hold on to profits too long, except for, you know, the piece for the dream, if you hold on longer than you planned and then it falls against you, then you know you've been caught out, and you might have planned your risk ahead of time, but then you let go, like, I'll just let it run up longer, and then bang, the stock hits you. So, and I think that's why holding on to risk management is so important. I got ahead of myself and then said example. For example, so I was talking about Microsoft. Honestly, it turns out like I made the right decision to leave when my stop triggered, like I said I would, because we never really got any higher. This is why, you know, you set risk for a reason, right? I could have waited longer, but I did get out the second we got, you know, where I said I wanted to exit, and that is why I made the exit where I did.
Yep.
Do you know what I mean? So I think that's why if I was, you know, greedy, and I think after the fact I was a little greedy, and I was like, I should have held on for longer. But, you know, honestly, no, it stopped. And I think a part of building up discipline, too, and I think that helps you manage emotion later. If you build up your discipline now, then you're not going to have this to look back on. Because, like, imagine, you know, what if you stay in a losing trade and it ends up working out in your favor, like, way after it should have? Well, then, honestly, you pick up bad habits, right? And I've done that where I've stayed in a trade that's gone to the downside way too long, didn't plan well, yada, 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 excuses, excuses, excuses. And, you know, you don't learn anything from that. All you learn is that you can get away from it, or away with it, sorry. And then you get away from better trading strategies. There was a comment here that I really liked, and let me find it.
Go for it.
Legendary Algo, there's always another trade. That's how I look at things.
Absolutely.
I agree. Sometimes you have to let it, you have to let it go. You have to say, you know what, this trade wasn't for me. You know, for whatever reason, maybe, you know, there's like, you know, giant wick to the downside, as the NQ sometimes likes to do, or the SPY likes to do. Something happens to the market. Maybe it's like the specific bad news came in and all the sellers are going crazy, and you're in a long, like, you just need to react in the moment, and then you can reflect later. But that's why, you know, having a plan is so important, is because even when your emotions get the better of you, then you know what you know what you're going to do, right? You don't have to think when you're already in a stressed out situation, when you're reacting to a crazy market. You've done the thinking ahead of time. Do you know what I mean? You've planned out your trade, you've thought ahead of time, and then there you go.
Okay.
You figured it out.
Some housekeeping stuff. First of all, we are moving right back down on the future, but we're getting right into that area that we talked about earlier. VWAP area at 15,850. That general area, keep your eye on that area that was previous resistance. We're looking for it this time around to act as an area of support. Let's see what unfolds. But we know we're very range bound, although it's about a 100-point worth of range. 15.8 bounce, 15.9 rejection. Let's see how the day finishes out. We're in basically the medium, the mean right now at around 15,850. All right, some other important, what's it called? Housekeeping issues here. We had a couple of auctions at 11:30, short-dated treasuries, 4-week and 8-week. They both came in, sorry, the 4-week came in at the previous 5.290, so no change in demand on the 4-week. The 8-week saw a bit of an increase in demand. Last time around 5.290, this time it came in at 5.280. So a bit more demand for that 8-week auction, 8-week bill auction, excuse me. We also had a couple of Fed speakers about an hour and 15 minutes ago. Should have been more alive to that, wasn't. Mester was dropping hot lines at 12 o'clock, so was Cook. They both spoke then. What else do we have here? Nothing really that I need to concern myself with. Keeping my eye on that. What the hell, man? Why is it showing me New Zealand? I filtered this so that it would only be America and Canada, and now it's showing me nonsense, so I'm going to have to fix that.
It's trying to tell you that that's where you should go on the safari.
New Zealand, there's nothing. Well,
No,
that's
I'm
not a
joking,
safari, but yeah,
but-
I wouldn't mind going to New Zealand, but maybe down the road. Yeah. Ram says I can see all of New Zealand in one day. Why? Trying to imply that it's small? She is. So
She's not even like skirting around it. She's like, yes,
no,
it's small.
She's dropping hot lines back there on the production on the desk. All right, so that is the look there. We had a couple of Treasury note auctions and a couple of Fed speakers. All of that has now come and gone. So we'll keep an eye on these markets. But this 15,850 area, I'm absolutely fixated on. Previous area of resistance now looking like it's going to be an area of support. Let's not, count our chickens before they hatch. Let's keep an eye on and see what happens. We're still $2 in the money on this NVDA trade.
That's amazing.
Yeah,
Congrats.
we don't have a lot left. Let me see how many outs I have left. Hold on. Yeah, a few outs left. So maybe we can get back into that 493. We got into 492.96 high a day on NVDA, but we saw 500 touch yesterday. It was an absolute rocket after rejecting off that level. Had about $20 worth of range. We saw Jensen Huang yesterday at the Microsoft Ignite conference making comments with respect to the importance of AI, analogizing it with the PC boom, with the dot-com boom, with mobile earlier in the 2010s, saying AI is going to be bigger than all that. Obviously trying to drum up hype for his products. I mean, let's just be real about it.
He and his cousin, or Lisa
Yeah,
Sue.
Lisa Sue, third cousins, by the way. We neglected to mention that today.
We talk about that so much, but it's like the craziest fact ever, so why not?
I'd like to be a fly at that
I know
dinner
you'd like
table.
to join the Sue Huang family.
Absolutely, man. Absolutely. Shout out to them. Obviously, very high-achieving family there. No question about that. But yeah, that's the look on NVDA. Quickly, I want to go back to something that I did earlier in the show. I want to show this issue in case you're just joining us. There was some disagreement yesterday, Adara.
It was more than disagreement. It was like a war.
I spoke to Ivan already in the chat.
Oh,
He's cool. He's cool.
Okay, cool.
Yesterday, with respect to whether stop losses can trigger in the pre-market and in the aftermarket. And so before I start playing the video, I want to make an explanation here. First of all, check with your broker. Do they allow pre-market stop limit orders, pre and aftermarket? Let's call it outside regular trading hours, stop limit orders. First, you have to discover that. Secondly, in the actual trading platform itself, you have to activate the order to trigger outside of regular market hours. There may be a toggle that you have to turn on. There may be not. It may be default. I'm not sure. You're going to have to check your own software. Now, when you get all those things, those two things done, here is how to enter the order. You're going to not choose just a stop order. You're going to choose a stop limit order. Okay? A stop order on its own is a simple market order. It tells the computer trigger at this price at the market price. Okay? Trigger when the price hits this price, and whatever the market price is, it sends a market order. It's not a limit order. That will not fill outside of regular trading hours. They do not fill. Market orders do not fill before 9:30 and after 4 o'clock. That has been my experience. Limit orders do. So you're going to go ahead and do this. you're going to enter in the actual triggering price, and that goes in the stop price. And then your minimum price or your maximum price, if you're shorting, that you're willing to accept is the limit price. So once you enter those two bad boys in, you've got two data sets, two data entry points right there, okay? And then you're going to basically, just wait till it triggers over here. We got long. You can see this red line where it says sell, stop, limit, 95. And then I move it up to 98 because the stock was getting away from me. It rejects $1. It comes down into 98. And lo and behold, baby, it triggers. We get that red triangle there. Stop, limit orders, trigger, aftermarket, and pre-market Adair.
Yes. So first I want to mention this. This is a kind of earlier comment we were talking about managing emotional trading, but BlackBerry here, I think I made many losses because of a kind of revenge trade after a failed one. Sometimes it's good to take a break and just do nothing. Very good advice. I kind of wish I'd taken it before I got into Google here. But basically we had this kind of double bottom-ish situation here. On the longer term, I'll zoom out. We have, yeah, okay, in retrospect, I kind of regret this. I should have looked more at this because we had higher highs here, we had higher lows, but then we had a lower high. In retrospect, this might be more compression-y than it is, heading down. So I really should have, I will admit, this was probably, I was a little too nearsighted here. I should have been more farsighted. And instead, I maybe got into this trade a little bit too early. But we are still having, a nice amount of stalling out and lower highs on the 5-minute candles on this level. If we break above, what is this, like 136.75, I am outie. In terms of my exit, I would like to get out around this 136.1 kind of as we approach VWAP. And like we were saying, not every indicator is going to be accurate or apt for every stock. But for Google today, we're definitely dancing around VWAP. We're doing the VWAP waltz over here. We're kind of dancing around this area at pre-market, came back down right below free market, this gorgeous swoop up, kind of back around VWAP. Like, it's very much clearly a level that I can look at least intraday at this moment for Google. So that's why I'm staying in this trade for now. We're still kind of at my point of entry. I think with regards to me regretting this, as I should have been spending more time analyzing the longer term chart than just me looking at it since we made this lower high, which is what I kind of initially did. And then B, I should have probably waited for another confirmation candle before entering. That being said, the trade's very much still valid. We're like 4 cents out of the money. So I did 3, but I meant 4. 4 cents out of the money.
All good.
So I'm not, you know what I mean? But this is regards to like risk and reflecting. I think sometimes reflecting while you're trading too, right? But I'm not letting my emotions get the best out of me, except for as I'm recounting the trade now in real time, staying in the trade. We're still within my parameters of risk, so we're gonna let the Tesla roll down the track, as I say, as I'm in Google, which makes no sense. Yeah.
All right, Air Trader. We actually spoke at length on Monday about having a trading plan. If you'd like to go back to that video, obviously YouTube will allow you to watch our previous shows. We talk about it at length. Go back, have a look at that video. We talk about it a lot about figuring out and sticking to your trading plan because that helps you manage risk, and that is the theme of the week. We are talking about managing risk in day trading as the theme of the week. Next week, we mentioned it earlier, it's worth mentioning again as the market breaks below 15,850. That was a key support level that I was looking at. VWAP as well. The market's below that now. Keep your eye on some longs. I'm keeping my eye on this NVIDIA long. But next week's theme will be chart patterns. They're already putting in work on that. I'll be putting in work as well. And we'll be talking about a plethora of different chart patterns next week. All right, guys, we have gone over the material twice today. We're now opening up the floor for questions with respect to the subject matter that we talked about today. Try to keep it risk management related. It doesn't have to be specifically about optimal stop losses, keeping risk consistent, or managing emotions. As long as it is managing risk in some way, shape, or form, we've been more than happy to answer your questions. Just make sure to tag us in the chat so that we're able to see your question. Otherwise, it requires us to read through the entire chat, and sometimes that's a lot easier said than done when you're having to manage both these. Are you still in NVIDIA 489.20 position? It's coming down. Yes, sir, I am. My out on this bad boy is 490. It was a resistance level over here. before we jumped in, and then it broke on that big move up. If it breaks that 490 decisively, I'll probably give it to around 489.75. I'm outie. So shout out to you, Ram. Charlie, Taff, how do you manage risk in your personal account? Very good question. Now, I got to tell you, full disclosure, I talked to Brendo about this. I talked to the Katina man about this. I told them I have to separate my swing trades from my long-term portfolio. Not separating them physically by having one account and another. No, by separating whether or not I'm going to get into something as a technical trader, or I'm getting into it because I like the whole pitch of the company, the move of the market, the fundamentals, in other words. Okay. That's something that I've been guilty of in the past, and I'll tell you quite frankly about that, where I've gotten into something, or I shouldn't have got it. I should have got out of something that I didn't get out of. Case in point, Li Auto. Let's talk about this, because this was a fantastic flat bottom break, descending wedge that I didn't get out of, and I'm kind of happy I didn't. But this is not always going to be good for me, right? This is what we were talking about over here. Let me just put in the ticker and everything else. So this is Li Auto, and this is the $38 flat bottom break, okay? And everybody and their mother's third cousin could see that we had support at 38. That was, you don't have to be an excellent chart analyst to be able to see that. Look how many times we are bouncing off that 38 level. All the while making those lower highs, lower high, but not necessarily a lower low. And then look what happened. One day I came in, you know how Chinese ADRs do, they gap down at 4 a.m. because there's a lot of trading in Asia at that time. And so as soon as 4 a.m. comes, those Asian traders it's midday for them, so they punch in. Or in this case, punch out. We had a big break of that $38 gap down into 35. In 1 day, we dropped $3 on the name. So this was obviously one of those technical patterns where I didn't get out because I wasn't sure, am I trading this for a technical setup, or am I trading this because I have belief in the long-term outlook of the company? And that is a mistake I've made in the past and probably will make in the future again. I'll try not to, though. So that is, something about how to manage a risk. Are you going to get in as a technical trader? Is this a swing trade, or is this a long-term trade? In which case, you should be dollar cost averaging in at key levels, okay? Until obviously, your thesis is wrong. They report and it's no good, this, that, or the other, okay? So I hope that helps with that. Let me just move up here because there's a lot of tags. I'm sorry about that. Air Trader, do you trade one-to-one R&R or one? Okay, so we talked about R&R a lot this week. I don't want to belabor it again because we've talked about it almost for 3 straight days. Go back, have a look at the previous videos from either Wednesday, Tuesday, or Monday. We talk about risk to reward and benefits of 1-to-1, 1-to-2, 1-to-3, and how to trade with those particular ones. Dorothy, what was the book you recommended yesterday? So there were a couple. So with respect to actually, learning technical analysis and, how to read charts and read and know other things about like waves and patterns and stuff like that, the book that I would recommend is Technical Analysis of the Financial Markets by John J. Murphy.
It's a good read. I'm working through it right now. Yeah.
Man, I gotta say, you have one of the best work ethics around here. That's a fact. That's one. And then the other one is with respect to psychology, because it's 50%, if not more, is Trading in the Zone by, what's his name again? Trading in the Zone by who? By Mark Douglas. Thank you for that. So Trading in the Zone by Mark Douglas, and then Technical Analysis of the Financial Markets by John J. Murphy. Those would be my recommendations. D-Loaf, sorry, Dara, I just got to go on here a sec.
Not a problem.
D-Loaf, can you ask the Katina man how much of his shop he trimmed in his personal? I trimmed 2 yesterday, but I'm only 1/9 about holding that big boy size. Katina man.
I forgot.
He forgot. So, and now he's doing it. He's on his phone. He's doing it as we speak. So shout out to you, D-Loaf. Thank you for reminding him. All right.
Yes.
Hertz Scrambler. I always dollar cost average into a position, make commission-free trading work for you. Okay. Well, commission-free trading for us here is adding liquidity into the markets. I talked a little bit about this. We're not going to get into it too much right now because we will get to level 2 and the different gateways. But on this prop floor, you can actually make money by trading, by adding liquidity into the market, and that can negate the amount of fees that you pay for trading. So you see Sean talk about this. You see Neil talking about this. They get in on inverse gateways, basically so that they can get in and they don't have to pay a whole lot in fees, and they could actually be positive on fees at the end of the day. That's something that you may be able to do at home, but I think it's a lot easier done on a prop floor. Samuel Martin, thank you very much, my friend. $1.99 super chat. Huge daily bull flag breakout coming on DWAC. Oh. Okay. Well, we'll have a look at DWAC. I'll look quickly. We're not going to talk too much about that because we're talking about the subject matter right now. But let's have a look at DWAC. I don't see a bull flag, my friend, on the daily. I see a nice little uptrend for a few days, but nothing really to get me too excited. When I look here, I see us very much within the range on DWAC. We haven't broken out through the range, and so I would stay clear, or I would stay put, basically, if you're involved, and I wouldn't get in. That's just my quick cursory view of DWAC.
Nice.
Moving down, RAM, I don't want to say your last name because I don't want to butcher it, is the red line the 9 EMA or the 21? The red line, my friend, is the 50. The blue is the 200, and they're all EMAs, okay? And then moving down even more here. Oops, damn it. Eek. Oh, my God. Yeah, here we go. Hog Rider, Sharif. Meta has been long all day. Keeps making higher highs and higher lows. If you see this, do you hold when it dips? My friend, what I would look at is key levels of resistance on META to see where we could top out. Let's have a look. Well, we are definitely at day's high. No question about that right now. 332.46 on Meta. But look at yesterday's high. We got into that 340 area. And then even the day before that, we got into 337. That was actually the closing print. So I think we got some room to move here on Meta. I wouldn't sell it here personally, but yesterday's close on Meta, I should tell you, we are encountering a resistance level. I say that incorrectly, sorry. The level of resistance, which is yesterday's close, possible level of resistance, is that 332.75. That was the closing print. That implies about 25 penny upside from where we currently are right now. Okay, moving down. Charlie Taft, fantastic example. Thanks, sir. No, thank you. Stock Loom. What's the worst mistake that you guys both did in the past in risk management, something we can avoid? You want to get to that one first?
Yeah, I mean, I think the biggest one, I mean, this Google is not the biggest one I've ever made. And I'm still in this trade because we haven't broken my area that I wanted to get out at. But basically this one, I liked it on the shorter term. Like I liked, if we see here, we have a lower high. I liked it for that reason for the short, but I should have gone up back further and looked at the longer term pattern on the day, which is not necessarily bearish. In fact, we are up on the day. It looks kind of compression wedge-esque. Do you know what I mean? So I really should have been paying attention to that. There's also, like I think the biggest mistake I've made while trading, I mean, I've honestly, like, there's been a lot. I'm still really new. I'm still very much learning. I think sometimes feeling the pressure to get into a trade, right? Because, I mean, there's actually a really good question here from Legendary Algo. What are ways you manage over trading when you tell yourself it's time to be done? I think sometimes, especially when you're trading live, sometimes you like, when I say live, I mean, like, I'm not trading live, I'm trading on a stand, but you mean, like, I mean, like, live on the show. Sometimes you feel pressure to, take trades and you don't really plan for them as well. I think the bigger issue, too, earlier especially, is like just not planning for a trade and then feeling I have to be in this trade, hopping in a little trade without really having, the forethought, really knowing where my exits are. I think lately, especially this risk management week has honestly been really good for me because it's really forced me to look at every trade and be like, where do I want to get in? Where do I want to get out? I think those are some of the biggest mistakes, is just not planning ahead of time or leaving a trade too early even when your stop hasn't triggered. That's why I'm staying in Google until we get to 136.8. I am staying put. So yeah, I think that's my biggest mistake. What about you?
What is my biggest mistake?
Was that what the question was?
I got to tell you, it's dollar cost averaging. Say that again, Raymer. Of course. Always about you, Ramin.
What is it?
Always about not getting her Starbucks. That has been my biggest trading mistake. Okay.
To be fair, a lot of people are really upset about that.
Well, I'm never going to live that down, eh? I'm never going to. The Katina man is disappointed. The Neil is disappointed. It can come through today. Look at all the fails coming in hot and heavy.
It's like going to be permanently stamped now, the fail.
Louise. All right. No, I got to tell you the truth. The worst, obviously, was dollar cost averaging unplanned and taking a big smack in the face in terms of an L. That's what I'm talking about, is being stubborn, and having fear, but not wanting to realize that loss. Not, in your mind, you're like, oh, it's going to go up. Oh yeah, we'll average in one more time. I'll punch in one more time over here. I'm sure it'll move up. That was my biggest mistake. I made that a lot more on my personal account than I have on this floor for obvious reasons. There's a shutdown here. You get smacked in the face. You can't trade. At home, you only stop trading when you run out of money or you get enough willpower to walk away from that desk. I got to tell you, I've punched through walls. I've thrown stuff at walls. I've yelled. I've screamed.
At walls?
Yeah, at walls, because I live alone. So there's no one to hear me except my Frenchies. But yeah, I've done that. I'm not going to pretend like I haven't. Absolutely. And they were bad days. And I remember those days. I remember them vividly. And they suck. But it is part of the process, and there's no way to get around it. I don't know too many people who have really excelled at trading and can say, I'm a consistent trader without having those big L's and without taking those big lessons. So you are not alone. I was there. I'm sure a lot of other people would probably be able to say the same thing, guys. The neighbor's cats got anxious, says John Sproul. I don't think any of my neighbors have cats. Not that I can recall. I know a few of them have dogs. Not too many cats in my condo, I gotta tell you the truth, yeah.
Well, that surprised me because you said your condo's clientele is a little bit on the older side.
Oh, yes.
So I am surprised.
Dinosaurish.
Yeah, that's the word you used. I knew there was a word you used. So I'm kind of surprised that they don't have more cats. And I don't say, yeah, like that's kind of, that's surprising that there's more dogs than cats.
Yeah.
But yeah, no, I feel like, yeah, we're kind of here, we're all learning some trades here.
Oil is absolutely tanking.
Oil?
Oil is down 5.4%. Oh my goodness, I got to mention this because I know it's not learning related, but we need to look at the CL here, the CL contract. That is oil, not Colgate. Where's my, there it is, futures. We're going to go to the continuous. Oil is absolutely tanking. Here is the 5-minute look on oil. There you go, guys. We closed out the day yesterday at 76.80. We are now knocking on the door of 72.37. Guys, keep in mind that the Strategic Petroleum Reserve of the United States requires topping up. So there is going to be a point, there is going to be a price that we get to, and I would suggest to you it's going to be soon, probably in the high 60s, where we start getting some buying here. Let's look at the daily, because I remember when Max was on the show, we would talk about this a lot. There was clearly, yes, look at this 66 level in the spring and summer. Look how many times we dip into 66 only to find our way right above that. This happened so many times. This is it's more, what's quadruple? What's the 5 of quadruple? Quintuple. This is a quintuple bottom, guys. We have that 66 touch back in mid-March. We touched it again here. What the hell? That was early May. Again, late May. Again, mid-June. And again, late June. We haven't been down there since. If we get to 66, you can bet your bottom dollar I will be buying at that level. Word, eh?
Yeah, that's what I was thinking. Bet your bottom dollar.
The sun will come out. I didn't get that one, but yeah, that's a good one.
That was good, Neil. I was going to make that joke, too.
He is good at stuff like that. Orphan Annie.
You haven't seen Annie?
Oh, my God. Guys, no, but we're talking for real here. Come to the chart, the Ram. Because this is a serious level, guys. It's not by accident that we were bouncing off that 66 level over and over and over. Word around the oil well is that the Strategic Petroleum Reserve is buying at these levels. Keep your eye at that 70 to mid-60 area to see if we do get a bounce. But what a big move down in oil today, guys. 5 1/3% Adara.
Yeah. Google also has been, we're still within my risk, but the more we kind of have this barcode on the 5-minute, the more we chop and churn, the more I am kind of shaking in my boots a little bit here. we're not like too far out of the money. We're like, what, 20 cents-ish? And again, I still, my reason for this trade, we did have this double bottom. We were going a bit lower. We did have lower lows and lower highs. Oh, they're so hard to say on the 5-minute candles. But I really should have waited for another candle of confirmation before hopping into the trade. So I think, learning risk management and patience in real time over here. There were technical reasons to get in this trade. We also did on the 5-minute, or not in the 5-minute. We did have lower highs. There we go. So that is interesting. We had also, but I should have went back further because we did also, I'm going to ignore this pre-market level. Since market open, we had a low, a higher high, a higher low, but then a lower high. So maybe it's more compression wedges. Maybe I should have waited for the wedge to kind of blossom and resolve itself before hopping in. You know what I mean? So I think reflection, right? Reflecting while you're in the trade, but I'm not letting my emotions get the best of me. It's not 136.80 yet, so I'm staying put. There is a stock, though, that part of me regrets not staying put, and the other part of me is really happy I stayed with my conviction, with my risk management, and got out where I did. And that stock is Microsoft. Now we are, I like this one. It's actually kind of doing similar to what Google did, but I got in Google on the short because Google had a lower high. But so Microsoft from open, we swooped up. We had a lower high, a higher low. And then we had a bit of a flat top here. And the reason I went long this, because we were long on the day. I mean, we're positive on the day. We're higher on the day than we were in Google, or are in Google, I guess. And then we kind of continued to shoot higher. That we got to 376. I got out where I did, though, at 375 because I was noticing we had a little bit of resistance there. And also, I wanted to initially set 375 as my level of exit because that was the last time we were kind of seeing a flat bottom. In retrospect, I should have gone back here. I should have done 374.6. It still would have been less than $1 away from my point of entry. So it would not have been bad, and I still would have been in the trade. So I think that's part of reflecting, too, and realizing, how you could have improved what ended up being a losing trade. I could have stuck with a stop loss. I think the word set and stuck were arguing with me there. And I could have been fine. I would have been fine. And, still adhering to a stop loss, it just should have been a bit lower, right? So reflecting, learning, growing, that's what we're all about here, especially with the new kind of midday scheme. Also, shout out to D's Nuts in the chat. Microsoft, out of context. I didn't know how to avoid saying it.
Yeah, you gotta say it.
Do you not?
These.
Oh.
It's okay.
These. Microsoft, out of context, sounds like a branded name of a cashmere top. I agree. That's actually very funny.
I like that.
Yeah, it was a cashmere double top earlier. And then I got out a skosh too early.
Skosh.
Just a skosh.
Love it.
But yeah, right now, I'm hoping Google goes a skosh lower because I'm still in that short. And my patience with this short is getting short. I need to stop.
Michael Lloyd, shout out. Here's the comment here from Michael. Oil. This feels like the starting of the disinflationary part of the cycle. Oil doing this usually signals the start of a recession, not the start of expansion or a new bull market. Shout out to you, Michael. I do agree with that. But I think that the market anticipates and prices and discounts a recession, and that's what we had from July onwards. And then it actually starts running up during the recession. So while the consumer is getting squeezed, I think stocks will go up. I don't know. We'll have to wait and see. But I do 100% agree with you on that, especially because it is a global market. And we've been hearing a lot about China lacking in demand for oil because, the whole thing was oil was supposed to run over $100 again once the zero COVID
I don't want to.
Hello.
Mike. Katrine's mom made some brownies.
Oh, yeah?
Also, hi, Katrine. I haven't said hi yet today. Hello, how are you? I like the glasses.
No, I can't, Thank you, Katrine, though. Yeah, I definitely want to. Thanks, Neil. I'm not hungry at all. Yeah, I do agree with you, Michael, and especially we've been hearing a lot about China, trying to, it was supposed to spur demand for oil, and that hasn't happened. BlackBerry. Adira, Sharif, why is oil down? Shouldn't wars increase prices? That's a good point. I think Michael just makes the point there. Sharif, what symbol are you looking at? I'm in NVIDIA at the moment, but the side chart is as follows. I haven't updated this since I sat down, though, guys. Ram, come to the chart. I did that on purpose.
I could tell. That's how I could tell.
Yeah,
Like
yeah,
your
you could tell I
delivery
did
when
that
you're
on
doing it on
purpose this
purpose is different.
ATGL is an absolute rocket, okay? So is SGD. These are the small cap gappers du jour. You have SGD up 725%. We started the day below $1, and now we're knocking on the door of $4. So SGD a rocket. ATGL also rocket-esque, as it is up 65%, trying to hold that $20 area. But I got to tell you, a bit of a flat bottom break may be happening here on ATGL at 20 as we make lower highs with a flat bottom at that 20. Be careful on this one. But another strong name. Sono, less volatile, but very consistent. Started its life today at that 11 1/3, and now we're at 13 1/2. So that was a good look there. Yeah. So those are the only ones aside from the Mag 7 that I've been watching on the day, guys. Moving down here, as I look for more comments. Michael Lloyd, yeah, I already answered that one. And yeah, that is it, guys. Keep bringing in the questions, though. So with respect to the topics that we mentioned today about risk management, whether it's optimal stop loss placement, keeping risk consistent, or managing emotions, please put your questions in the chat. This is the time of day when we can get to the Madeira. About 15 minutes left on the show.
Yeah, I mean, definitely, yeah, we're here to answer questions, to manage emotions. Also, this kind of thinking about managing emotions. It was making me think earlier, too, about someone in the chat saying, why is it harder to, I think it might have been Blackberry, why is it harder to, celebrate wins than it is to, castigate yourself for losses? And I think part of that is that, we, as a society, we're really just hard on ourselves. But I think, maybe part of managing emotions is celebrating your wins more. Like, you took the W, celebrate it. I think maybe that's part of, emotion management. I was just thinking about this. I think that that could be very much of interest there. And I think another part of managing risk and if you manage ahead of time, manage your emotions, is being patient and not jumping with both feet into the trade. Maybe start with a smaller position size, right? Plan your stop loss level ahead of time. Just kind of riffing now on risk management. Also, another thing too, like I'm looking at this Tesla, for example. And I'm looking, we did have is this a quadruple bottom? I think it could be a quadruple bottom here on Tesla. We're plummeting to the downside. I was kind of looking at this around 233 as a point of entry. But the thing is, too, is a little bit riskier because I don't know where I'd put my out. We're at low of day. Where would I put my stop? I don't, although again, never mind, it's a short. So I guess where would I take my profit? There we go. I'm thinking longs. I guess I'm very, very clearly long biased. I mean, we've been talking about this obvious short as though it was a long. But yeah, I think recognizing your bias is important too, right? Because then you might look at trades and see something that isn't actually there. But yeah, anyways, I think with something like this, it's kind of, you just have to be like, if I got into this trade, where would be my, my point of exit? And I think in this case with Tesla, maybe you put your stop loss at 235 because that was where the flat bottom was. If we break above that, that might be where things get a little bit dicey. Or maybe if you got in earlier, maybe you put your stop loss where the flat top is, right? I think a lot of it really depends on your point of entry. Also making sure you're not chasing a trend. I think for me, entering Tesla right now as a short is making me a little bit nervous. I definitely entered the party a little bit too late. BTC on my bottom fishing and Tesla is a mistake every time. I agree. I think right now, you know what I mean? I think part of it is if you ended up, calling the trade ahead of time and you entered the party at the perfect moment, that's great. Sometimes you're fashionably late and then you just have to decide the party's, the door's been closed. I'm not going to join the party right now. So I think, learning from mistakes and managing your risk for what's best for you and what's best for your trading style. And I think for my trading style, something like this where I don't necessarily know where the bottom is, even as a short, makes me just a skosh nervous in terms of where I set my profit taker, so I probably wouldn't get involved. And I think, being honest with yourself about how a trade's going, how you're feeling about the trade is, I think, maybe part of risk management and emotion management too.
Okay. Air Trader, is drinking alcohol good to control emotions? Come on now. Eh? Yeah, I know he's joking. No, I know, Katina, man. No, look, man, I mean, it's not like we've had a beer on the show before. It comes Friday. We got a couple of beers back there, but never been inebriated. We've had a couple of sips. I'm going to tell you, though, if you're going to, I would never personally drink and really put on a trade. I don't know what the effects would be. I think, you know, probably mess a lot with your risk assessment mechanism in, you know, in your mind. So I personally would stay away from anything that would, you know, affect your ability, your cognitive ability. That's kind of what I'm trying to say there. And that goes for other psychostimulants as well. I mean, I've heard a lot of people talk about that. You know, there's other things as well. All right, guys, I got to talk quickly about this NVIDIA trade because it is coming and is breaking through that 490 area. And I said I would get out of this if it broke through that 489.75. I'm waiting to see a 75 print here on the ask, not on the bid. I want to see it cross, but right now it's bumping back up above that 490. I'm going to pack my patience here, but the market absolutely gave up support there. We were talking about that 15,850 level as support. It was previous resistance on the way up, and it was also VWAP. We're definitely breaking below it now. You're getting a big move down on Tesla. You're getting a move down on Amazon, on Softy, and even NVIDIA. So be careful here with the longs on some of these big tech names. We're getting a bit of a bounce as I say that, obviously, because the market has to make me look silly. But yeah, well, that's just the way it is. If I see 489.74 here on this on the ask side of the level 2, that is going to be the end of my trade. Okay. Yeah. Quickly here, what else are people talking about? Look, Robert Thung. You mean I don't want to get into drug use and stuff like that, microdosing. I mean, look, whatever works for you. I can just say, you know, tread carefully, okay? Tread carefully. But what, you know, I'm not going to tell you how to live your life. All right. BlackBerry. How do you adjust your day trading? Your trading on special market events like these or witching days? Very good question. Or is it not important for your decisions and stop losses, etc.? No, it is. Because you know on triple witching, quad witching days, there's going to be more volatility, okay? We know the contracts expire that day. The futures contracts roll over as well. So there's obviously going to be some volatility, and I would definitely make sure to have that mentality when placing my stops, because knowing full well that I will likely encounter more volatility on that day. So that has to influence.
Sorry, what is a witching day?
Oh, yeah, no problem.
Yeah, I figured I may as well ask. We're all learning here.
Yeah,
so.
yeah, absolutely, yeah.
Thank you,
Always,
appreciate it.
Vera. I mean, look at this over here. So this is the NQ futures contract. Look what it says up here. December 15th, 2023. That's when this futures contract expires.
Okay.
Okay, and then we move on to the other one, and I'll show you the other one quickly. NQ, and then we go to futures, and then look how it shows me different futures contracts.
Okay.
December 15th, and there's a March 15th. A week before, or on the Friday before December 15th expires, we are going to, this floor will switch to the March 15th contract. So that is what they talk about with respect to quad witching, triple witching, blah, 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 blah. Okay?
Okay.
It's the expiration of options contracts and futures contracts that roll over to the new one. And because of that, you have a lot of volatility.
That makes sense. Thank you. I appreciate that. So this would be like quad witching then, because it's like a couple weeks before? Or?
I don't forget the difference between the two, man. I mean,
but it's
I
some
knew
kind
it
of
before.
witching. We're doing something.
Now. Yeah, it is.
Thank you. I appreciate that.
So that's the look there. That's all I want to say about that. Yes, I absolutely would have a different appetite for risk on that day because I know the volatility is going to be higher. Air Trader, you watched the movie Limitless. The guy took a drug to up his senses, and he was doing trading. Same with Wolf of Wall Street. They take, look, dude, I'm not going to tell you how to live your life. You want to use things to assist you in your endeavors, that is your prerogative. But I'm not gonna comment on that. All right, let's keep going. Is quad witching tomorrow? No, I don't think these options contracts expire in December, or these futures contracts, pardon me, expire in December. The Hayes records. Come on, man. All right, JB, have you ever had a swing trade that you lost so much on that it's too late to get out and let it ride? That is a good question, because I was under the money. I was out of the money, excuse me. I was underwater.
I like under the money.
I know.
I like that. You're just like ducking underneath it.
I know. We make up stuff, and then sometimes it sticks. I was out of the money on Li Auto, but again, that goes back to what I was saying earlier. I kind of blended whether or not this was going to be a part of the long-term portfolio into dollar cost average so long as I saw good fundamentals come out through earnings, or whether I'm going to take it as a technical trade, and in that case, I should have gotten out through the flat bottom break of $38. That is a mistake that I made. It's probably something that I'm going to do again in the future. I'm going to try not to, but it's hard to answer your question because I sort of blended them together. I didn't know whether it was going to be a swing trade or whether it was going to be a long-term portfolio hold. So I'm not going to be able to answer that question, sadly, but I do understand it. And, you know, maybe let me mull it over and I'll have a better answer for you tomorrow or some other time. Let's keep looking at some of the questions here. SGD ripping faces off. Yes, sir. SGD now is up a zillion percent. It's up 872%, and it's halted at $4.67. It's an absolute rocket. I didn't get to even talk about this because we've been busy teaching, but I don't see an entry on it. I don't see a blotter entry on it today on my chart, but safe green development. Okay, let me just look here to see if there were anything else. Are you guys seeing it? Neil, it's not in our database here on PPRO 8, so we can't trade it on Day Trade the World. I can trade it on my platform, but I gotta tell you, I'm not seeing anything on the blotter to explain why we're moving up. The last entry I have from on my blotter is from November 13th, so I can't really answer that question, but it is very strong. Take a look at BTC, says Diaz29. What's Bitcoin doing? Tanking.
Oh.
Down 3.5%, about to break that 36,200. We're at 36,225. Not a good look, and you're getting a big move down in coin as well. Well, not coin. Coin is only down 1.75, but Mara and Riot down high single digits. Let's keep going here and look at what anybody else is asking. All right, no questions so far, Adara, unless you have.
There's this one from Zach Abramson. What is the first thing you look at that gains your interest in looking at a specific instrument? I'm guessing like a trading instrument,
Pardon
or is this what's the first thing that you look at that gains your interest in looking at a specific instrument?
I want to see what's moving on the day. Yeah.
Oh, okay, right. That makes sense. Yeah, sorry. Yeah.
What's moving? Are we? What's gapping up? And you know all about that. You do the watching.
That's true. Yeah. Yeah. So I think it's like what's moving. What is happening? How is it interacting with certain levels? Are there certain levels it's holding? I think that's when I get interested sometimes for myself. Yeah.
No, I agree with that.
I think it's a good question. Yeah. Also, Mike in the chat, it's quite amazing the no fear in the market. Yeah. I think traders have fear and greed, as we talked about, but the market has no fear and does not care about your feelings.
I'm out of NVIDIA. That's it. That's the end of the trade there.
That was a solid trade, though. You had a lot of nice peak wetters earlier. Yeah,
it was good. We were $4 plus in the money at one point, but now we come out and we take a 50-penny winner on the last little bit there as NVIDIA now breaks down below that 490. It is still green on the day. Yesterday's closing print around that 489 mark. So you do have possible support at 489. That is yesterday's closing print on NVDA. And you know, we are still at that 15,850 on the NQ. We gave up the ghost a little bit. We had a quick wick down into around 15,8 in the third. We bounced back up. We're a couple of points below that half-point level, that 50-point level, excuse me. That 50-point level was resistance earlier in the morning. It did act as a level of support throughout the afternoon, but it looks like we may be trending down. We've had beautiful bounces off 15.8 and a nice rejection off 15.9. So whether you're long bias or short bias, there was something for you today in the market. I hope you took advantage of that. Elon asks, Sharif Adara, the worst practice is you turn a day trade into a swing or a long term because it went the other way. Could not agree more. If it's a day trade, you cut it at your stop loss. End of story. End of story. I couldn't agree more with you on that, Elon. Very good point. Tony Price, if a stock is going up because if a stock is going up, it is because buyers are stronger than sellers. Yes, absolutely. That is correct. What else is being asked here? Any other tags? Stockloom. Just a suggestion, can you guys increase the font size of your charts? Absolutely. I will get on that. I've done it before. I can do it again. Sorry about that, and I do intend on making it a bit bigger. That's it. I think we're good to go. Any other final thoughts, Adair? A couple minutes left.
Yeah, learning a lot, growing. We had, I'm going to be really honest, no winning trades today. But you know what we did gain, what we did win is knowledge. Which is, you know, maybe very cheesy, maybe very after school special, but we learned a lot here. I'm excited to, you know, be a little bit more patient when I enter my trades and just wait to see that setup really, you know, materialize before I decide to dip my toe into the water there. We're gonna maybe stay off at the side of the pool for a bit longer next time.
All right, we're going to close off with a very, very strong stock on the day. It is Intel. We have been at this 43 level for the better part of an hour or so. We haven't really printed much higher than 43. Sure, there have been wicks, but 43, an obvious resistance level. If we really start tanking on the markets, I would look for a 43 short here. But at Intel, you can keep on your watch list now for longs going in to the rest of the week and maybe early next week, as it has decidedly broken through that upward channel on the daily chart. We charted that earlier. It's a good look as they look to shift their business model from a chip design to chip foundry to manufacture chips for other designers, guys. Keep your eye on Intel. Very, very strong on the day. We have 10 seconds left. Any final thoughts? You want to send it off? Let's send it off. Yeah, we had a great time today. And now we will be with Brendo at the big desk. If I may say, same bad time, same bad chattel tomorrow. Brendo's at the big desk.
Hey guys, yeah, welcome in 2 o'clock on a busy afternoon here. Just reading through some energy headlines today. Crude oil, if you